Tests.
Moving forward. And I think Palantir's done a great job of positioning itself as one of the premier AI analytics companies. And with that government backdrop, people can feel a little more secure on the commercial side buying from them. So I think a lot of where we are with Palantir right now is that belief that there's still a fundamental hockey stick growth curve that we have yet to experience. And in some ways, I agree with that, but this is all about timing, which quarter, when, how many customers. And I think we're very excited. And I still think there's going to be a drag in terms of actual commercial adoption.
That said, does the sort of quarter by quarter adoption matter less if you're a believer in that long-term hockey
Watch Apple
stick?
here.
So will we, I mean, even if the stock reacts, which we might very well see, does it matter less?
So I think what happens is in the short run, it doesn't matter as much. In the long run, we're looking at who the transformative companies are and who people are placing bets on. And it's pretty clear that they've made some significant inroads in the AI category. So from that perspective, I think in the long run, there's still going to be one of the premier companies. That doesn't mean it's without risk, though. So for example, we talk a lot about what's happening with Grok, for example, in government, and other opportunities for serious foundation models and players to come in and disrupt that. So they have a good foothold right now. They have to continue to maintain that and try to create a moat around it. But there are some forcing functions of other competitive pressures that might impact them in the long run as well. So it's still a little too early to say that they're going to run away with it all, but they've certainly put in a good foothold at the moment.
And speaking of competitive pressures, that brings us to one of the other companies reporting this week, AMD. And really, the competition is the story with AMD, from whether we're talking about NVIDIA or whether we're talking about companies like Broadcom as well. How do you think AMD is doing, and what are the results going to show to reflect that?
Yeah, in some ways, I think this is a completely different story because from the perspective of AMD, I do think that there's tremendous growth potential for them. The question is have we been over enthusiastic? Because realistically, when people are looking for AI investments, yes, there's AI in everything, but there are a few companies you can point to that are so very discretely AI focused, right? And chips is one of those categories. Where I see the big growth for AMD is both on the lower end, which is a CPU, and on the higher end, which is the GPU market. So they actually are playing both of those games, which is relatively unique in terms of competitor that can play both of those games well right now. And one of the things they have going for them is everybody wants to create a strong competitor to NVIDIA. And we thought for a long time that was going to be Intel. We saw what's happened with Intel. There's still opportunity for Intel to come back in and be a player.
Still writing those
but right
Apple
now, people are placing a
contracts,
second bet,
215 calls for
this
Friday, August 8th. Let's see how much we get out of them.
When you look at, we've had some guests say to us, well, AMD sort of provides a cheaper alternative to NVIDIA, not just talking about the chips, but the stock itself. Right. It has gotten a little bit less so. We've seen that the stock has recovered quite a bit, especially into these earnings. So again, just like we talked about with Palantir, what would you say about the expectations for AMD at this point?
So one thing I would say has been very interesting is that recent bump in pricing that they've had on their AI GPUs, right? Significant hike in pricing, which should actually help some of the margin issue that we've been thinking about with AMD. They've typically been known as a lower cost provider. That was sort of a Trojan horse strategy to get in. But if you're pricing yourself, even, in this case, it would be somewhere between 17 to 25% less than a basic NVIDIA Blackwell GPU, it's still a value. And when you're buying that many of them in the hyperscaler landscape, there's still a lot of opportunity. So I think that there's some levers that AMD can still provide, but no doubt there's been just a tremendous run up in AMD and, as we mentioned earlier, Palantir. There's a lot of frothiness in the market, and the actual purchases might not meet today's frothiness.
We shall see.
If this keeps pushing, ultimately I'm looking for Apple
Thanks, Maribel.
above
Appreciate it.
209. I need that to
Coming up, we got
hold.
to
I
look
am
into
still
August
holding 215
seasonality in the markets
contracts.
and stocks and translation. Stay
Strike
with
price
us.
215 for this Friday. Looking really solid so far. Overall, good ER report on Apple last week. It really shouldn't have retraced as much as it did. So I think today's bounce, and if we do get additional volume momentum throughout the week, it has to do with the fact that it reported really well. So we'll see if it gets back up to that breakout potential level. We do need it above 210 ultimately for a move into the 220s, 225 long term. So we'll see. Also, keep in mind that Apple is already at 2.5% for the day, so this could be the high of day. We'll see. We have SPY rejecting at highs here. We have Qs rejecting. We have IWM rejecting. So
With July
we'll see if we
coming to an
get
end and August
consolidation.
trading right around the corner, in today's episode of Stocks in Translation, we are taking a look at seasonality for the month of August. And again, these are just the recurring patterns that we tend to see build in the market over time. Not an exact science, and sometimes these patterns shift, but this is what I'm looking at right now. So here we have each of the 12 months, January through December, and this goes back to 1990. This shows the median returns, kind of similar to an average in green bars. And then in white, those white squares there, that is the percent positive. And what you're going to see here, August, notice August, these returns are not that spectacular. It's under 0.5%. It's not negative the way September is, but in fact, it is the third worst month of the year. And we're looking at a percent positive of only about 54%. And as a background reminder, I like to see that number above 70% because stocks usually go up. So August, usually not the best month. What you want to see is what tends to happen in March, April, and May here with nice positive returns, or October, November, even December here. But if you remember, March and April were not that great this year. So that is another reminder that seasonality, sometimes seasonality gets bucked and things can intervene and markets can go their own way. And of course, the tariffs, with a brand new president this year, with Trump and the tariffs, all of that took a U-turn. And this is the U that we were looking at in the market right here. This is in white, what we have seen year to date in the S&P 500. Now in blue and in green, I have two different maps. So the blue is a median since 1990. That matches what we were just looking at in that first chart. The green is another way of looking at the market and the seasonality. This goes back to 1928, and I'm only using the days when it's the same day of the week. So for instance, today is Monday, July 28th. I'm only looking at those Monday, July 28th going all the way back to 1928. So it's just a small subset of those years. But nevertheless, I found this particular way of looking at seasonality has very powerful predictive effects because it tends to track the holidays that we've seen in years past and 401k flows and all the things that affect seasonality. So what I'm seeing right here is we are right in the market right here. We tend not to have a stumble in this market model until we get to early October. And October, as I've said many times before, is prime time crash season. We actually get an uptick in volatility in September, but September, October, November are those months that you want to kind of watch out for. So now I'm going to zoom in on August alone, and I have these same two market maps that we were looking at before. Since 1928, same day of the week, that's in green here, and then since 1990, that is in blue. And what you're going to notice is we start off the month on a downbeat. That very first day tends to be historically negative, but then in both of these models, we eventually climb out from underwater. In the blue model, since 1990, it takes about half of the month, and we finally get there about 15th or 16th of the month. And then in the other model, since 1928, same day of the week, we get to positive territory a little bit earlier, and we end the month a bit higher. So we could have lackluster returns, and of course, anything could actually happen. We could have new tariff news that intervenes and takes the market down again. We could have something like a very optimistic or dovish Fed this week that sends the market higher. But in any case, I do want to close here with a bonus, and this is US dollar index seasonality. And I'm including it here because I have these two very similar models to what we were looking at before. Instead of 1990, I'm going all the way back to 1970 in blue. And then in green, I have since 1971, those years with the same day of the week. And I'm going to trace out that green. This is a model that I'm really paying attention to. It turns up right now, right at the end of July into early August, and it sends higher basically into the beginning of October here. And what is a US dollar? What does a higher US dollar mean? Well, that tends to disrupt a lot of risk markets. Sometimes it's an impediment to sometimes it's an impediment to stocks going higher, commodities and crypto as well. And with all the bearishness on the US dollar, and I totally buy that case, I think the positioning and the sentiment is such, it's so bearish that we could actually see a strong up leg. So that's something I'm going to be on alert for in the month of August. So tune into Stocks in Translation, the podcast, for more jargon-busting deep dives. New episodes can be found on Tuesdays and Thursdays on Yahoo Finance's
Apple
website,
wants to push
you find your
again. Just
podcast.
keeping an eye on Amazon, seeing if we get some sort of reversal here. You see SPY back up at the highs, Q's pushing, IWM pushing. So market as a whole, we want to take another step up. Let's see if we get it. New high of day on SPY. Big red on Apple here. Came back down to VWAP and bounce. Let's see if it holds or if we get a double top here and start to retrace. Q's is
Tesla's
looking
board
weaker
has
now.
approved Elon Musk's massive new $29 billion stock award. Will that be enough to keep the CEO's focus aimed at the EV giant? Joining me now, Yahoo Finance senior autos reporter Pras Subramanian. This is less than the initial pay package that was approved and then rejected by a Delaware court. So what do we know about this one?
Sounds like it's going to address some of the issues about his focus, and it requires him to be there for a few years and devote a certain amount of time to the business, and that's sort of what people like Dan Ives are asking about in terms of what they want from Elon Musk going forward, and as the company approaches a critical phase with robotaxis and Optimus robots and all sorts of cyber cabs and all those things happening. So I think it's
Good to see you in here.
those key issues. It's still a lot of money. I mean, I don't know any CEO
Taking
making
it slow
that
today.
much money in the span of 3 to 5 years. But yes, it is.
Looks like
significantly less than
Apple,
that original pay package. It's
Q's,
still
market as
tied
a
up
whole might be
in
ready
the
to
court
take a
system
little
still
step
to this
down.
day.
This is the biggest red
And they
we've
said that
seen on
if
Apple so
if
far,
one
and
of those two
it's
gets
pretty
approved,
significant.
it wouldn't like be a double dip situation where
It's
it'd be
$1.50
one or the other. You
move,
couldn't
so-
get both. So that's
Gotcha.
going to address that
Okay.
concern.
Let's
So,
see.
What about the sort of ongoing questions about the board independence at Tesla? Those haven't really gone away, right?
Yeah, I mean, the board's confident that Musk was going to be okay with this package. Like, well, yeah, he's on the board. He sort of is friends with everyone there. Robin Denholm, the chair, is something that someone supposedly handpicked. I mean, so you have to ask that question. Is still in play as to how independent is this board? There's only one member who's independent, so that's really interesting to me.
Right.
But
And there's also, of course, the cognitive dissonance between this headline, which, yes, we know was sort of a retroactive pay package, and the fact that the stock is down 25% this year.
right, and then the core auto business
Right.
is slipping quarter after quarter, and there's no indication that's improving. Yes, we have the new Model Y out now, but it was out last quarter and it was still sort of down a bit. So there needs to be something happening. We're not going to see that cheaper EV not till after the tax credit goes away. So a lot of question marks here. It is a pretty big pay package, but I guess if you're a Tesla investor, there's some certainty here with what Musk is going to be doing
Right.
in his time at the company.
Yes, to some degree. Let's talk about another big story that you're following here. Boeing, some of its employees poised for a strike, the second strike that we've seen in less than a year.
Yeah.
Who does this affect? What do we know about it? How likely is it to actually happen?
So you're right. The defense unit their workers are striking, about 3,200 workers or so. This compared to the 50,000 or so that they're working in the commercial unit, right? So they make the F-15 fighter jet. They're supposed to make the new upcoming next generation fighter, which is a big deal that Boeing won a contract for. The defense business is profitable, which is more than you can say about the commercial unit right now, but it's much smaller in terms of revenue. Boeing made about $22.6 billion last quarter. About 6.6 of that was with the defense business. So it's a nice chunk, but it's not the lion's share there. CEO Kelly Ortberg said during the earnings call that he said not to worry about this strike. It was coming. They perhaps expected it. And he said it wouldn't have a
Tesla
significant
bleeding
impact on
out.
their business.
That would have been a
And
good
that they
short at
probably
open.
see a resolution coming in the next month or so, but we'll see. You never know. These things can extend. Apparently the last strike for Boeing's defense workers was, I think, around 90 days. I had like 30 years ago, so
Right.
it's a little rare, but
And the shares are not much changed today, so it sounds like investors are, they are reassured by what Ortberg has said. All right, thanks, Pras. Appreciate it. Coming up, full market coverage ahead in the second hour of Market Catalyst. Don't go anywhere.
The early bird catches the gains. This is Morning Brief Market Sunrise. Live from London, we deliver an early read on global markets, from overnight action in Asia to real-time sentiment across Europe's major trading desks and a live look at US futures. We cover the stories to help you, the individual investor, get the edge with actionable financial information and unbeatable context. So grab that coffee, tap in, and let's own the morning.
Apple holding strong here. Let's see where this candle closes. New candle opening here.
Coming up this hour on Market Catalyst. First up, weakening labor market data upping the odds for a Fed rate cut. We'll have full coverage ahead. Plus, Disney results are due out this week. We'll break down everything you need to know ahead of that report. And for today's Stocks in Translation, we'll dig into the return of the red-hot IPO market. All that and more coming up on Market Catalysts. 90 minutes to the start of U.S. trading. I'm Julie Hyman. Let's get a check of the markets now. We do see a big rebound here in stocks today following the losses from Friday. Traders ratcheting up the odds of a Fed rate cut. That's sending the Dow higher by 474 points, about a gain of 1%. The S&P up about 1.2%. The NASDAQ leading gains up about 1.5%. We are also watching the India market, and that's because we just got some headlines from President Trump that he says he'll be substantially raising the tariffs paid by India. He says this is because India has been buying what he calls massive amounts of Russian oil, and then he says they are selling it on the open market for big profits. This saying coming in a Truth Social. As a proxy for the India reaction, we are watching here downward taken after that headline. So we'll continue to monitor that as well as the rest of the trade developments. Well, Director of the National Economic Council, Kevin Hassett, saying the firing of the Bureau of Labor Statistics Commissioner is part of a complete overhaul of that agency. President Trump calling Friday's jobs report, quote, rigged, and saying he'll pick a stellar successor as he looks to add his allies to the Bureau of Labor Statistics to ensure, quote, reliable results. Joining me now, Gus Fauché, PNC Financial Services Group Chief Economist, and Yahoo Finance Fed Correspondent Jennifer Schonberger. Thank you both for being here. Gus,
watch for tech. If we get a tech bounce here, especially on Microsoft, Amazon, we're going to get that new high on
Qs. This firing was a good idea.
It's holding right now, right at VWAP.
The Bureau of Labor Statistics has a great and well-deserved reputation for putting out reliable statistics. There's no politics involved in the process, and I think it's unfair for the president to claim that it's rigged. It certainly sends a very bad signal for the president to fire the commissioner of the BLS. And I think the idea that he would appoint his own commissioner increases the possibility that we do get rigged numbers sometime down the line. I'm hopeful that won't be the case, but this is very disappointing. We depend on these statistics. We need to know that they are reliable and not political, and this moves us further away from that.
And Jen, it's interesting because, in fact, the just fired commissioner of the BLS had talked about that maybe budget cuts were part of the challenge in data collection. And I mean, listen, I didn't listen to all of the commentary over the weekend from Hassan and others, but it doesn't sound like with the revamp of the department that they're giving it more resources, unless I missed something.
Yeah, it certainly doesn't sound like it, Julie. But I think the core of the BLS team that needs to execute the data collection is still intact. And I would just add that the BLS commissioner does not control the data. So to the president's point, it's sort of impossible that those numbers could have been rigged. So whoever he puts in place to replace Erica, I don't know. I mean, it certainly looks political on its face, but I'm not sure how much of an impact that's really going to have here unless there is direction to slant the numbers. That remains to be seen, and that would be hard to try to dig into whether that is something that is going to be done. So if we see another weaker jobs report and we have the president's new person in place, it'll be interesting to see how the president reacts there.
Right. I mean, do you just end up firing person after person if you don't get the numbers that you want? I don't know how that plays out. But Gus, when you look at the numbers themselves from Friday, I did see some commentary this morning that they were not, in fact, as bad as they initially appeared, in part because perhaps we're seeing a labor supply issue rather than a labor demand issue. What do you think?
I think they're bad. I mean, I don't think there's any way to sugarcoat this. We saw a substantial downward revisions to job growth in April and May. We've only added about 35,000 jobs over the past few months. Is it possible that some of this is due to deportations, restricted immigration? Yes, but that just means that the economy is, not in very good shape, that it's more susceptible to a downturn if we have slower labor force growth. That weighs on economic growth over the longer run. So sure, maybe it's because of slow labor force growth due to immigration restrictions, but that is a negative in and of itself. And I think the job market now looks a lot softer than it did just last week, and it does raise increased concerns about the potential for a recession in the U.S. economy.
Jen, we did hear some of the Fed officials commenting last week and saying they were sort of leaning into that immigration narrative. What did we hear from them?
Yeah, I think Gus makes a lot of good points, Julie, but if you listen to the vice chairman of the Federal Open Market Committee, New York Fed President John Williams, he still thinks the job market is in a solid place. And we heard similar comments from the head of the Cleveland Federal Reserve as well, Beth Hammack. But to Williams' point, he is looking at the aggregate data. He's looking at initial jobless claims. He's looking at quits. He's looking at job openings. He seemed to be more concerned about the downward revisions that we received. But to the point on immigration, he does acknowledge, we are seeing a more limited labor supply. So perhaps we're dealing with a labor market here that we know it's been cooling over the past year, right? We're continuing to see the no hire, no fire economy. And you have to wonder how much uncertainty is weighing on hiring right now because of the different tariff rates we're seeing. Perhaps once we get more certainty on that, the question becomes, will we see a rebound in jobs later in the fall? But I think when it comes to will we have a Fed cut, come September, come this fall because of the weaker jobs report we saw, that's not necessarily a slam dunk given what we're hearing from high-profile voices on the Federal Open Market Committee. We're seeing a Fed that's very divided over inflation, the impact of tariffs on inflation and the job market. And right now, they seem to be taking this report in stride.
Gus, what do you think? Does it, some of the folks I talked to last week on the back of the jobs report suggested that the Fed might be motivated to do a sort of catch-up cut given how bad those numbers looked. What do you think?
I think that the weak July jobs report trumps concerns about inflation right now. I think that the labor market is clearly softer now than we thought it was just last week. The Fed is focused on their dual mandate of both maximum employment and stable prices. I think that most Fed officials think that the impact on tariffs is likely to be temporary, that we will see a reacceleration in inflation, but then it will slow again toward the end of this year. And that given the concerns about the softness in the labor market, given that monetary policy is at this point already weighing on growth, I think the Fed will go ahead and cut in September, and then we might see a couple of more rate cuts over the next few months after that.
Of course, the irony about President Trump being upset about the report is it might be the thing that pushes the Fed to do the thing he wants them to do. But Gus, I also finally want to ask you about the implications of Adriana Kugler's seat on the FOMC now being open, President Trump being able to appoint someone or to succeed her. How are you thinking about the influence or the independence of the Fed at this point?
Obviously, the president has the ability to appoint the person that he wants to be on the board of governors, subject to Senate approval. The president has made it clear that he favors rate cuts, and so I'm assuming the person that he appoints will adopt that view as well. And I think this is likely a trial balloon. I think that, given that Chair Powell's term as chair expires in early 2026, I think it's likely that whomever the president appoints is going to be in the running to be Fed chair. But I think that, the president will be appointing someone who agrees with his policies, as he has the right to do. But I think that, it's going to be very interesting to see how all of this plays out over the next 6-9 months with Chair Powell and the president's obviously disapproval of his views, a new Fed governor, and the dissents that we saw last week, which were, we hadn't seen dissents by 2 members of the Board of Governors in 30 years.
Yeah, certainly it will keep us guessing and busy, and we'll catch up with you again, Gus. Thank you very much to Gus and to our Jennifer Schomburg. Appreciate it.
Thank you.
Coming up, Disney making a new billion-dollar deal reportedly ahead of earnings. We'll talk about that and preview those numbers for you. ESPN reaching a deal with the National Football League for the rights to its Red Zone and NFL media assets. That was reported by The Athletic, excuse me. It's the latest deal for Disney ahead of its earnings for its fiscal third quarter coming Wednesday, August 6th. And Doug Kreutz, TD Cowen Managing Director covering media and entertainment, is joining me now. Doug, it's good to see you. Before we sort of dig into what you're expecting for earnings, I am curious about your reaction to this report about ESPN reaching this deal with the NFL, and reportedly it will give the NFL equity interest in ESPN. This is something they've been working on for years. Do you think this is a good deal for ESPN and Disney by extension?
Well, it certainly makes it so the NFL has a very real stake in ESPN succeeding, which, the NFL being the most important major sports league, that's a good thing for ESPN. The economics of the deal, I think that's a little bit of a TBD. We'll see how it goes. But with ESPN launching their direct-to-consumer product in the fall, and the trajectory of linear cable still remaining very much in question, I think having this vote of confidence from the NFL and again, sort of skin in the game is a good thing for Disney.
And what do you think the sort of role and functionality at this point of ESPN is within that Disney business, both sort of shorter term and then longer term?
Yeah, I think it's still a bit TBD. I mean, obviously, it still generates a significant amount of cash flow for them, which they can then reinvest in other parts of their business. But as far as how it, kind of synergizes with the rest of their biz, they have people who have Disney Plus and have Hulu and maybe have ESPN too. They've got sort of a bundle that has not everything, but
in this
at
video,
least bits of everything. But recall that's really a U.S. only product, so it doesn't help them as much globally. And I think that's one of the issues ESPN has, is that because it's a U.S. only product, you're sort of locked into a very mature television streaming market. Beyond that, I think it's still a bit of a question mark. I think it remains an asset where the very long-term future isn't super clear. Again, it's hard to see how a streaming only ESPN product would do well if there wasn't, some critical mass of linear cable subscribers that continue to be there for the next decade plus. And again, I think that's a very open question.
And speaking of questions and zooming in on the upcoming earnings this week, Doug, what is your biggest question going to be for the company sort of going in and awaiting those numbers?
Yeah, I think the question 3 months ago would have been, how the park's doing, particularly with Comcast Epic Park opening. There was some concerns with that cut into Disney's attendance. I think Epic has done well, but it hasn't done so wildly well that you would be really concerned that Disney was seeing, a major impact. Not that there won't be an impact, but I think everybody assumed there'd be some impact. And I also, 3 months ago, people were more concerned about macro, and that seems to have receded at least a bit. I think that the more pertinent question is, they had a summer with 4 big movies. One of them, Lilo and Stitch, the remake, did very well. They had an animated movie, Elio, which did incredibly poorly and will almost certainly be a meaningful write-down. It's another original IP film that they have made that hasn't done well on the animated side. And it's not just them, it's the entire industry. Original IP animated films are struggling. They also had, I think maybe most concerningly, 2 well-reviewed Marvel films. One, Fantastic Four, which had a good opening weekend, but really had a major fall off in the second weekend. And I think in general, there's got to be some concern about the trajectory of the overall Marvel franchise and whether it's lost a lot of the interest that it used to have and was a key driver for them.
Yeah, I think we were a big Marvel household, and now we've got a little Marvel fatigue, I have to admit. And when you look at that parks question, how do you think they will be doing, given, to your point, the competition from the newly opened park in Florida?
Yeah, look, the parks business has been functioning very well. They had a little bit of a soft patch last summer, but it seemed to have recovered. Again, I think Orlando will probably be a touch slower this quarter because of the Epic opening, but not so much that it's going to have anybody concerned. You know, they've got multiple cruise ships are going to be coming to market over the next few years as an opportunity for them there to have additional growth. I think the parks business is good, right? It's going to continue to be good, sort of barring any major recession. I think everybody knows that, right? It's sort of, I don't know as an investor if you get paid for the parks business being good, just because that's kind of baked into the stock.
And speaking about being baked into the stock, you've got a hold rating on it, $123 price target. What has to change for you to get more bullish on Disney?
Well, I think one thing is we kind of need to know who's going to replace Bob Iger.
Yeah, small thing, right, Doug?
That remains a very open question. You know, will it be somebody internally? Will it be somebody from outside the company? We don't know. And he's supposed to be handing over the reins next year. He has been supposed to hand over the reins many times in the past, and he's still CEO after some time off. So we'll see. I think that's a really big important thing, and sort of whoever does replace him, what's their vision for Disney over the next 10 years? It won't necessarily be the same as Bob Iger's. And then I think, it's the media business, right? It's how much can they grow Disney Plus profitability? I think that they can get it higher, but can they get it higher fast enough to offset the diminishing profits of linear? I think that's also another very open question that they have not been able to answer in any concrete way.
Right. Yeah. So we'll see if there's any hints on that direction in this earnings call. Probably not, but we'll see. Doug, thank you so much. Appreciate it.
Thank you.
We got much more markets action coming up. Stay tuned. You're watching Market Catalysts.
This status will update to active once you have successfully completed all the steps outlined in this video. Click on your CQG account to find the Tradovate credentials. To copy them, simply click on the credential field. And it will be ready to paste wherever required. Navigate to trader.tradovate.com webpage. Paste your login credentials into the username and repeat the process. Click on Login. You will be prompted to review and sign the market data agreement. Carefully read through the agreement to ensure you understand its terms. Then, select the non-professional option and click on Next. The next section, take a moment to review acknowledge your understanding. Last name. Please close the pop-up window. Accept at the. Well done. You have successfully market data for your CQG account. Your curse. Great day.
Welcome back to Yahoo Finance. I'm Britt Mama. We're live at the NASDAQ. Let's get a quick check on the market action about 2 hours into today's trading session. All three major indices holding on to this momentum that we see in the early innings of this week. The Dow, NASDAQ, and S&P 500. All in the green, all up about 1%. The NASDAQ leading the gain here, up 1.5% after that tech rally that got a bit of a sell-off on Friday is now regaining momentum. As we saw over the past 5 days after we got that weaker than expected jobs data, the firing of the Bureau of Labor Statistics director, as well as one Fed chair stepping down, investors now trying to come to terms and understand all this latest data that we've gotten, especially as those ongoing trade negotiations are underway. The S&P 500 also still holding on and trying to continue that momentum that we really saw leading up in July. And now, once again, that sell-off on Friday as we're trying to reverse those gains, bounce back. This rally is undergoing as we make our way into today's trading session. I also want to take a look at some commodities. What we're really seeing here is oil under a bit of pressure after OPEC Plus agreed on Sunday to raise oil production by 547,000 barrels per day for September. And what we're really seeing there is this bit of a decline down about 1%. And really that's sort of offsetting what we've seen over the past month of a nearly 0.3% gain. Also taking a closer look at the NASDAQ, what's leading the momentum there. What we see is most of the NASDAQ in the green this morning. There we go, loading there. The NVIDIA up more than 2%, leading momentum there. We also are seeing Google, Microsoft, Apple, and Meta leading momentum there. Amazon a bit under pressure after that sell-off on Thursday after their weaker than expected Amazon Web Service data came out. Now that momentum continuing, or rather sell-off continuing into the week this week. Keep a close look. We'll be tracking all the market moves throughout today's trading session right here on Yahoo Finance.
Now time for some of today's trending tickers. We are watching Tyson Foods, Spotify, and American Eagle. First up, Tyson Foods raising its earnings forecast after quarterly profit unexpectedly rose. A boom in U.S. chicken continuing to offset losses in the beef business. Still with us, our Brooke DePalma. Brooke, you just talked to the CEO of Tyson. What did you hear?
Yeah, just jumped off the phone with CEO Donnie King, and there's really two names to the game here. They're being more efficient in their operating systems, and protein craze continues to bode well for Tyson Foods. Donnie went on to say that in this sort of environment, consumers are prioritizing protein. He said, quote, they're prioritizing protein over other foods, but they're also prioritizing food as essential versus the non-essential things like apparel, bigger ticket items. And he really went on to say that there have been efficiently and working at really maximizing their supply chain, maximizing their innovation, and that's boded well for them, causing them to raise their operating income as well as their revenue outlook for the year as consumers are really seeking out. We have low-income consumers seeking out the best value here. Then we have medium to high-income cohorts seeking out convenience, and that's boded well for their chicken business. They're getting the best bang for their buck, and that's really offsetting what we're seeing in their beef segment.
Yeah, and all across the board, to your point, buying that protein. Next up, let's talk about Spotify. Those shares are getting a boost after the company said it will increase the monthly cost of premium subscriptions in markets across South Asia, the Middle East, Africa, Europe, Latin America, and the Asia-Pacific region. Those shares are up almost 7%, Brooke, as it does that price increase.
Julie, I was so shocked to see. I went to the Yahoo Finance data page and we're looking at shares of Spotify, and I did not realize that over the past year, shares of Spotify are up more than 100%. There's been so much momentum around the streaming space in general, and Spotify certainly feeling that momentum, especially seemingly that they have the pricing power here to really raise subscription prices there. Year to date, also we're seeing the momentum up nearly 50%. And so this is definitely one to watch as this streaming service unfolds. Also, this pricing power in this environment where consumers are really, nickel and diming. They're really trying to get the best bang for their buck. But seemingly, Spotify believes here that they're able to raise prices in this sort of environment as well.
Yeah, and those shares, by the way, were trading at a record as recently as late June. They're still kind of near that spot. And finally, the Trump effect on American Eagle, not the place I would expect it, but American Eagle shares are spiking. President Trump coming out in support of the company's Sydney Sweeney ad, which has faced controversy since its release. The shares up by 17%. I guess I can't be surprised at the president weighing in on anything these days, but that wouldn't have been the first thing I would have picked.
Right. I mean, certainly American Eagle stock getting lots of attention. Over the past month, what we have seen is this momentum up nearly 23%. This has been a company that has been under heat, under pressure over the past year, especially as many apparel stocks have gone into the red after what we've, been concerned about, these fears over tariffs and their sourcing regions. And now seemingly this commercial getting American Eagle some positive attention here. And even over the weekend, this is a big story when it's Wall Street discussing this attention that they've got because of the Sydney Sweeney campaign. It's President Trump weighing in. And then you also have Main Street. All my friends were talking about it, Julie, over the weekend. And they were also talking about this marketing strategy, this technique of Sydney Sweeney so seamlessly just discussing the jeans without discussing the jeans. And now we're also seeing Dunkin' Donuts look to get in on that exact trend of, I'm not going to tell you to buy Dunkin' Donuts, but I'm going to tell you about it. And it seems like there's lots of momentum behind what this could become. Of course, getting mixed up a bit in the meme stock rally as well.
Right. So were your friends thumbs up or thumbs down on the Sydney Sweeney ad?
My friends what?
Were they thumbs up or thumbs down on the ad?
They were just talking about it, and they just thought it was interesting. I mean, to have that sort of, to want to buy them, to not want to buy them, but it'll be interesting to hear how the quarter sort of plays out when American Eagle discusses how well it did, I'm sure.
Yeah, if it actually boosts the numbers, we shall see. Thanks so much, Brooke. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's training tickers page. Well, rideshare companies Uber and Lyft are set to report earnings this week. Joining me now, Rohit Kulkarni, Roth Capital Partners Managing Director and Senior Research Analyst. And Rohit, it's so interesting because we're waiting for these Lyft results, but the company in quick succession first announced that it was closing its acquisition of FreeNow, which is a European taxi rideshare service, and then also signed a partnership with Baidu to then bring robo-taxis to Europe. So is that, how big of a change is that for Lyft?
Hey, thanks for having me, Julie. It is a sign. Exactly those two things are good signs of improving execution at Lyft. That's something that has been an issue all along, and that has been an issue amongst investors where Lyft has unproven potential, and with M&A, with partnerships, and just basic baby steps, left foot, right foot, indicates good execution, and that should be supportive of positive sentiment into earnings.
And as for the earnings themselves, what do you expect them to show?
Overall, I believe just the macro backdrop, lack of volatility due to tariffs, general FX related tailwinds, travel spend, high-end consumer, all these data points are coming together for both Lyft and Uber. There may be some pockets of inbound travel softness into US, but overall, we expect, we are clearly leaning positive into Uber and Lyft for their earnings. For Uber, we think they need slightly better than a small beat into the quarter. For Lyft, the bar is quite low. Near term, we are tactically more positive on Lyft. Uber, we like it, we love it a lot. Longer term, that's the one to own. So overall, I would just say leaning positive.
And for Uber, obviously it is a more diverse business, which historically has been one of the reasons that investors have preferred it, right? It's also given it kind of flexibility when the mobility business isn't working as well. It leans into delivery. Yep. What is that sort of mix going to look like this quarter?
The mix has somewhat remained surprisingly stable and constant. One would think they would have slightly greater mix towards the delivery business, which has more kind of organic growth drivers. Just beyond restaurant delivery, they have ads business, they have grocery delivery, they have e-commerce delivery. So there are more organic growth drivers in the delivery business, but the mix has been 60-40 over the past couple of years, which is more mobility, and 40% of the business is delivery. Profitability in delivery has improved significantly over the last 6 to 9 months, so that has become more of a focus area amongst investors. On the other hand, on mobility, stating the obvious, what happens with robo-taxis, Tesla, Google's Waymo over the next 6 months is going to be a big focus area on Uber and Lyft's results as well.
Well, and who do you think between these two wins in autonomous? I mean, we've got this new announcement in Europe from Lyft. We have, of course, as you referred to, the Waymo partnership from Uber. Who do you think comes out on top?
In my opinion, kind of, it still remains to be seen, but the peak kind of fears of existential issues on the ride-sharing business because of robotaxi, I think from investors' perception, the peak robotaxi fears are somewhat behind us. The risk is still elevated. In a world where there are more robotaxis on the road, what does the role of Uber and Lyft, what is the role of Uber and Lyft going to look like is still TBD. But as more robotaxi partnerships with ride-sharing companies come to fruition, just as Waymo is doing with Uber, Baidu is doing with Lyft, and then there are other companies like Pony.ai doing with Uber in various different geographies. And so, in a world where there are many robotaxi offerings, the value of a marketplace like Uber or Lyft is going to be much greater than where we are today. So that's our anticipation, but that we still are in this kind of elevated risk zone for both Uber and Lyft, and investors very closely monitor robotaxi launches as such.
Yes, it's been an interesting story to watch. Rohit, thank you so much.
Thank you so much. Bye-bye.
Coming up, we got a crash course in IPOs with host of Stocks in Translation, Jared Blickry. We got more on that when Market Catalyst returns.
After the 2022 bear market, stocks were hitting record highs by early 2024. But the frozen IPO market has taken a little bit longer to warm back to life. And on today's Stocks in Translation, we are providing a refresher into IPO basics. Now let's start with the definition. An initial public offering is the first time a private company sells stock to everyday investors and gets its ticker listed on an exchange. It gives the company fresh cash. It also gives a chance to earlier investors to cash out, and it gives everyone a real-time price tag on the shares. Now let's check out a chart of IPO activities going back to 2020, the start of the pandemic. All the stimulus from the Fed and also from Congress, they quickly found a home in speculative corners of the market. Just as GameStop was peaking in early 2021, so did IPOs. There was $131 billion in IPOs offered in the US in the first quarter of 2021 alone. But the 2022 bear, it wiped out risk appetite around the world, and only recently has IPO issuance started to perk up again. There are a few steps along the way for a new IPO, and this begins with a bunch of preparation with the help of bankers, auditors, and lots of lawyers. The company's financials must be audited, and the lawyers draft what's called a registration statement that has all the docs that investors need to read. Now, this whole stage takes easily a few months to a year. Then in step 2, a company will file the package confidentially with the SEC, which is a stocks watchdog in the US. Government lawyers, they will then comb through the documents, and then there's a bunch of back and forth as SEC comments are addressed. This can easily take 6 months and often longer for smaller companies. And when it looks like the SEC is nearly satisfied, the bankers or underwriters, they put on a road show for investors to gauge demand for the shares. They will build what's called a book of orders to arrive at a price tag for the stock shares. This period is measured in days to a couple of weeks. Now, moving on, when the bankers decide on a selling price, that's called the IPO price, it's determined the night before the stock starts trading on an exchange. Most investors will not be able to get in at this price, and it's considered a privilege to get in at that IPO price. On what's called listing day, a market maker will try to align demand for the IPO shares with the supply of shares that the company is offering. And ideally, the stock will trade higher than the IPO price, which produces a gain for new investors. But guess what? It doesn't always work out that way. Finally, a lot of times shares issued at the attractive IPO price, they are locked up for a period of 6 months to avoid investors dumping the stock on the market to collect easy profits. Now this year, money is finally starting to pour back into new ventures, and we've seen some giant IPOs take place. As part of the AI trade, CoreWeave, they raised $1.5 billion. But on the very first day of trading, the stock closed exactly at its IPO price. So no first day gain for investors there. Figma and Circle, on the other hand, they delivered some nice pops for investors, 250% and nearly 170% respectively, with Chime just a little bit lower on the list. And there's still a number of unicorns or private companies of $1 billion or more in value that are waiting to IPO, from Klarna and Stripe in the fintech space to Cerebra Systems in AI to the Winklevoss brothers, Gemini Crypto Exchange. All in all, IPOs can present opportunities for investors, but before jumping in with your eyes closed, remember this. Over 90% of IPO stocks, they trade lower than they did on their first day of trading. And more than half the time, that happens within 3 weeks. So you can usually wait for this stock to come back a bit before dipping in. And thinking about the long term, only 1 in 5 new IPOs doubles in price their first year. A word of caution for those who like to swing for the fences. So always remember, you should treat these as riskier than average investments. And tune into Stocks in Translation, the podcast, for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website, or wherever you find your podcasts. More market catalysts after this.
Investors have a busy week of hospitality and leisure earnings ahead, starting with Marriott on Tuesday. Results will give Wall Street insight into discretionary demand and the spending habits of the average consumer. Here to discuss is David Katz, Jefferies Managing Director. David, good to see you. So we've already heard from a handful of hotel chains. We're going to hear from more, as well as get more into casinos and gaming this week. But I'm curious what your impressions have been so far from what we've heard, and how that sort of informs what we might still end up hearing.
Yeah. So, look, I think getting ready for Marriott, one of the perspectives that we bring to it, having seen a number of the hotel companies, is that, the volumes and pricing environment is really inconsistent. There are challenges with inbound international travel, particularly from Canada. We've seen certain segments of business travel been strong versus weak. We've seen the low-end RevPARs be persistently low. But fortunately, when we look at companies like Marriott, because of the business model and their ability to continue growing their units or their NUG, they're able to continue growing their base of the core business. And they also get growth, as we know, from an ancillary business, their co-branded credit cards and other royalties that they derive that are actually even growing faster, Julie, than the core business at this point. And so, we're very focused on those business models and their ability to keep growing even in a really herky-jerky earnings environment that we've been experiencing.
Well, it's interesting because you're not the only one who I've heard talk about this net unit growth theme this earnings season. Is that just going to, is the answer volume in a lower RevPAR environment?
Ever since 2019, right? If you look back at historical RevPAR, particularly in the United States, it's been relatively anemic. It's been a low single-digit number, notwithstanding the COVID recovery in that period. But from a like-for-like basis, RevPAR has really not been a driver of these businesses for quite some time, right? We're in year 6 of this. What's been driving those businesses is NUG and their ability to grow their system size. Now, some of that has changed, and that provokes an interesting debate because, the new build of hotels has slowed, and more of what they're getting are conversions, either from independent hotels or other brands switching into theirs, right? And then more recently, we've seen these affiliation deals. Like, for example, Marriott has a Bonvoy deal with MGM for the Las Vegas Strip, where it's not the same economic intensity as a traditional deal, but it's more rooms in the system and it's incremental fees. And so that growth continues and it begets the ancillary growth that I described earlier.
Interesting. So you want sort of more well-grounded, different sources of revenue. Unless people's eyes glaze over, again, just as a reminder, NUG equals net unit growth, RevPAR, revenue per available room. On an anecdotal basis, it doesn't feel like increases in hotel rates, room rates, have been slowing down, just as a consumer, right? But sort of situate that for us, contextualize that for us, what rates have been doing.
Yeah, and Julie, I'm guessing that the finer places that you choose to stay, are probably still able to raise their rates because if the market will bear it, they'll keep doing it, right?
So it's my fault. I need to refuse to pay it, I guess, is the answer.
You need to choose to stay somewhere else or choose an alternative vacation. But when you look across the different segments, right, the economy and the limited service segments have been negative for quite some time. Other companies in our coverage, for example, Wyndham, Choice, that's where they primarily operate. And it's been holding those stocks and their valuations back just a little bit. The luxury end of things is still getting some rate growth. The higher end resorts for a while paused and are now back getting some rate growth. And one of the important drivers we should touch on, is group business, right? Where conventions are a function of the business economy and they are still producing reasonably good growth, although we heard some commentary about maybe some slowdown in the back half of this year. But so far, they've been operating well. The most important thing, Julie, to remember is that RevPAR lasts for a day and NUG, could last a lifetime.
Right, makes sense. And just quickly, before I leave you, I do want to ask you a question about the sports betting stocks. Ahead of football and all of our winter sports, is now the time to get in on those stocks?
There is absolutely a seasonal focus from Wall Street on sports betting. These companies will often spend a fair amount of promoting and marketing in most of 3Q until the football season starts. Historically, football has been roughly 40% of sports betting volumes here in the U.S. And so we do expect there's going to be, an increasing interest in sports betting stocks as we go forward. I do want to point out we're spending a ton of time working on the prediction markets, right, and their legality and what they mean for their presence within, the sports betting market over time. But I'm glad you brought them up because they are going to become a much more focused subgroup of our coverage as we get into the ensuing weeks.
Well, good. We'll have to catch up with you again on that and on that prediction markets, which I agree are pretty fascinating. But David, we got to leave it there for now. Thank you so much. Appreciate it.
Thank you.
That's it for Market Catalyst. I'm Julie Hyman. Thank you for watching. More Yahoo Finance coming up.
Are you ready to master the markets and, dare I say, become a better investor in the process? Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom for key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on yahoofinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
the excess competition, addressing the lack of consumption. China now providing cash handouts to families that have children. That's a first, breaking a taboo in terms of providing direct cash handouts. So when we look at key parts of the world, emerging markets, and also commodities, we see a world that 6 to 12 months from now is going to be growing faster than the U.S., which is going to struggle with lack of immigration, with tariff effects, with higher inflation. And so we want to be continuously adding to the non-U.S. markets and to commodities, which we think are the beginning of a secular bull market. And really, and the bottom line for us is the U.S. has been the place to be for the last 15 years in global equities. That's no longer the case. We're at the beginning of a secular leadership change away from U.S. equities to the rest of the world, and that's where we want to be adding to.
And I want to talk more about this. Ben, before we sort of dig into that a little bit more, I do want to get the latest from you on what's going on with the tariff negotiations and trade, particularly as it pertains to China, because we got a little bit of direction on that over the weekend.
Yeah, we did. We have a couple deadlines looming this week, and then China next week. First is the reciprocal tariffs deadline. That's going to go into effect on Thursday, according to Trump's team. This is kind of basically everyone in the world except for China. And then, as you mentioned, next week is the August 12th deadline for China. We did get some guidance there from Trade Representative Jameson Greer, who again sort of echoed, wouldn't say specifically that there's going to be an extension of the tariffs on the horizon. The line we're hearing from the Trump team for days now is that there's still technical details to be worked out, and that Trump is going to make the final decision. But there's a widespread expectation there that at least another 90-day delay on tariffs is in the offing. And then on one of the biggest issues front and center right now is rare earth minerals. The way Greer just described it is they're halfway there to work out a rare earth minerals deal about kind of China loosening their exports of these precious materials, which are crucial for the world economy. I think the overall takeaway from that detail is how slow these talks are going. Rare earths was of course the top agenda item in London a few months ago when they met last time, and it's clearly a lingering issue. We're seeing it in a lot of things. The Wall Street Journal had a good report today about how the military is really struggling to get the rare earth minerals it needs. So this is clearly a top line issue, and it shows how far the negotiators have to go to get to a lot of other issues, from currency, from intellectual property, that are going to take months and months and months to even get to.
So, Jay, I want to turn this last one to you. As you talk about wanting to be elsewhere in the world, places like Europe and in emerging markets, what about the tariff effect on those places, right? I mean, yes, I know that they are passing on some of the cost to their customers, but not all, in not all cases. So do you expect some negative effects on the countries that are being tariffed, and how does that affect your investment thesis?
Sure. No, it's a good question, Julie. And I think the markets have already spoken, right? Going back to what we just talked about, U.S. has been underperforming. Market is already telling us that the bulk of the tariff impact, which will be negative, tariffs are a tax, right? There's a reason the world spent 50-odd years trying to reduce tariffs and boost global trade. Tariffs are a tax. Taxes are not great on economic growth, and therefore the market has spoken, both in terms of the stock market, U.S. underperforming, the currency market, dollar weak, the bond market, U.S. rates high, rest of the world cutting rates. The market has spoken already. Tariffs are a bigger impediment to the U.S. than to the rest of the world. And the real fear that we have at TPW Advisory is that the U.S. economy will continue to slow, and the market is expecting rate cuts, as you touched on at the open, but the Fed is going to have problems providing those rate cuts because inflation is well above target. Core PCE came in last week, 2.8%, Fed target 2%. So the Fed may not be ready or able to cut as much as the market would like them to. So when we look at the rest of the world, right, three things quickly on Europe. Record low unemployment, ECB rate cuts over the last year yet to be felt in terms of beneficial impact, and massive fiscal stimulus coming out of the core economy in Germany. All three are suggesting that growth will be better in Europe in 2026 and 2027 than it is today. Same in China. We wrote our piece, Friday Musings, rates rise in the East. The single biggest, most important macro factor that we're focused on is whether or not China can beat deflation. If China beats deflation, that means better growth in China, less risk of China exporting deflation to the rest of the world, higher corporate earnings in China, higher stock prices, higher multiples, and most likely a stronger currency. And so that's what we're really focused on. Can China defeat deflation? We think it will, and that's why we're long Chinese equities.
Jay, thank you so much. Really interesting conversation. Ben, thank you as well. Appreciate it.
Thanks, Julie.
Thanks. Coming up, we'll dig into Berkshire Hathaway earnings as we see those shares lower this morning. We'll be right back. Shares of Warren Buffett's Berkshire Hathaway sliding after it reported mixed results for the second quarter over the weekend, warning of considerable uncertainties generated in the first half by trade policy and tariffs. Also in focus, as always, is the company's cash pile, which now totals $344 billion. Here with more on the latest report and what's next for Berkshire is Kathy Seifert, CFRA Research VP of Equity Research. And Kathy, for context, has a hold on the stock of $535 price target. Kathy, it's good to see you. Interesting report from Berkshire. You had the Kraft Heinz write down, you had some insurance, I don't know, volatility, I guess you could call it. What stands out to you as sort of the most important thing for investors to be watching?
I think there were a handful of things that people may want to focus on. And, one of the things, I do have a hold on the stock. I downgraded it late last year when I noticed that top line growth, revenue growth was slowing. And we saw that continuing this quarter with operating revenues, which exclude investment gains, down 1.2%. I think the lack of organic revenue growth removes a catalyst from the shares. The insurance results, as you noted, were mixed. Geico's results were actually not that bad. Their growth is less than that of some of their peers, but claim costs were sort of contained, which is a good thing. Berkshire's commercial lines businesses are still showing some deterioration, and showing deterioration at a time when some of their peers have gotten a better handle on that. So that sort of laggard effect could drag into the next couple of quarters. That removes a catalyst from the shares. I think one of the big things, though, is that Berkshire didn't buy back any of their own shares. And the stock has been pretty weak since Buffett announced that he was retiring. The shares have sort of lagged the broader market. And so the combination of Berkshire not buying back their shares, coupled with the warning that the next couple of quarters could be difficult, definitely tempers my enthusiasm, and obviously that of a lot of investors, evidenced by this morning's performance.
I mean, and Berkshire not buying back its shares, they must know that sends a signal to the market, I would think, that they're not making that move, so that doesn't signal a huge vote of confidence. Is that unusual for Berkshire to be doing that?
No, I mean, Berkshire has a lot of companies and a lot of their peers, particularly in the insurance space where some companies have excess capital and they'll aggressively buy back stock. Unlike those companies, Berkshire's share repurchase policy states that they will buy back shares when Warren Buffett deems them to be below intrinsic value. And so, or i.e., a good value. And so I think the fact that, they have not bought back any shares this year, and for quite some time, it's been actually over a year, I think does send a pretty powerful message to the market, particularly when you look at the cash position, which at the end of June was over $340 billion.
So what do you think for a while, Buffett has said he's not necessarily seeing things that are worth spending that cash on, whether it's Berkshire's own shares or other stuff. Do you think investors, are going to get impatient or have gotten impatient that money is not being spent?
Well, that's sort of the, kind of the favorite conversation around Berkshire is what are they going to do with the cash? And they have a lot more patience than perhaps some of their investors do. There's talk right now, given what's going on in the rail space, that Berkshire may jump in and, add to the consolidation in the rail space. Ironically, one of the bright spots in this quarter's earnings were some improved operating efficiencies at Berkshire's rail operations, which may throw a little bit of cold water on the notion that they need to acquire to stay relevant and improve operating efficiencies. I also think Berkshire doesn't like to make acquisitions when there are market forces perhaps forcing their hand a little bit, like what we're seeing in the rail space. My sense is that, the market has underperformed, some of the broader other markets year to date, but valuations are still not that attractive, particularly my sense is through the eyes of a value investor like Warren Buffett.
So it sounds like you think a BNSF deal, at least in the near future, is unlikely.
Well, I think Berkshire is going to do what makes sense in that space. My sense is that they're not necessarily going to want to pay an inflated price. I think they've learned that lesson the hard way a number of years ago with some deals that Buffett has since acknowledged they overpaid for. And then you take that also against the backdrop of the fact that they just had to absorb a multi-billion-dollar write-down in a significant investment in Kraft Heinz, and the fact that the Occidental Petroleum deal, they're currently carrying about $5 billion above fair value. My sense is that they may be a little more guarded in the entry price that they get for their deals.
And Kathy, we're of course approaching Greg Abel taking over at the beginning of next year. Will investors sort of give less of a pass to this company without Warren Buffett directly at the helm?
I think that's a really good question. And one of the things I think that investors are probably focused on and probably need to think about is that my sense is there may be pressure once Greg takes over for Berkshire to pay a cash dividend. They're one of the few components in the S&P 500, particularly given their size and their financial strength, to not pay a cash dividend. And I think that's one thing investors may want to focus on in a new management era at Berkshire. And I think the other thing investors are also focused on is that, and why the stock has underperformed, is that you have arguably one of the world's greatest investors stepping down from the helm of a very large conglomerate. The person taking over has a very solid industrial background, but does not have a professional money management background. And we really haven't heard a lot of detail about some of the kind of, second tier management strength at Berkshire. It's there. I think they would do investors and themselves a favor to highlight it, but we really haven't heard a lot of that. So there's a transition period in the broader economy that impacts Berkshire. There's also a transition at Berkshire that's impacting them. And, more information is better than less. And unfortunately, we haven't heard a lot of details about the transition.
We are waiting for them. Kathy, those shares down about 3% today, little changed on the year. Thank you so much.
Thanks. Nice being with you.
We got much more markets action coming up, including trending tickers. Stay tuned. You're watching Market Catalysts.
Welcome back to Yahoo Finance. I'm Brooke Tamama. We're live at the NASDAQ. Let's get a quick check of the market action 1 hour into today's trading session. We're seeing all three major indices in the green, really bouncing back off of Friday's market sell-off. Taking a closer look at all three major indices, we have the NASDAQ really leading momentum here. It's up nearly 1.7%. Up around 340 points here as we make our way into today's trading session. The momentum there certainly with that AI tech rally underway. Dow also moving higher, up about 1 percentage point there, and the S&P 500 about up 1.2%. Taking a closer look at what exactly is trending, we also have that earnings report out from Palantir expected after market close today on Monday. That stock gaining a bit of momentum here, up 3.4%, really extending this momentum that we've seen year to date heading into this key earnings report after market close, up more than 100%. Investors will be keeping a close ear or a close watch on what exactly they say about that latest contract with the U.S. Army and also how they're playing a key role in the AI arms race. Also trending on our site as well as Tesla, that stock up about 2% as we're really hearing more about the Tesla's board approving a $30 billion alternative compensation plan for CEO Elon Musk to really keep him on board, focus in on the company. That stock has been pressure year to date, down nearly 23%, down nearly 24%, as really this momentum has been around where Elon Musk stands in the company, how much of a focus he has in the company, and we've seen that sort of playing out year to date, but shares certainly rallying on this contract that could be underway. Also, if you take a look at the NASDAQ, this is something that was completely in the red on Friday as investors tried to assess that weaker than expected jobs data, the firing of the BLS director, and also that trade uncertainty. And now we're seeing a bit of a bounce back led by NVIDIA here. That stock up nearly 2.3%. Also rallying is Google, up nearly 3%. And Microsoft really holding on to momentum that it gained last week after seeing a bit of a dip on Friday's market sell-off after its cloud business outperformed what the street had expected. So the NASDAQ in the green. We also have the Dow mostly in the green as well. Amazon seeing a bit of a drop-off there, continuing the momentum or the downtick that we saw on Thursday. And all three, or all their sectors rather, in the green as well. But keep it right here on Yahoo Finance. We're tracking all this data as we get into this week's trading session underway. Once again, all three major indices in the green this morning.
Now time for some of today's trending tickers. We are watching CommScope, Joby Aviation, and Wayfair. First up, a $10.5 billion deal between CommScope and Amphenol. CommScope will sell its broadband and cable equipment arm to Amphenol for about $10.5 billion in cash. It's the second such deal it's done with Amphenol as part of a series of divestitures aimed at paying off its debt. Amphenol, for its part, has made a string of acquisitions in recent years. Last year's deal for CommScope's outdoor wireless networks and distributed antenna systems businesses was the biggest ever by the Connecticut-based company at the time. This deal is expected to close in the first half of 2026. Next up is Joby Aviation. It said it plans to buy the helicopter rideshare business of Blade for as much as $125 million in stock or cash. The electric aviation pioneer is looking to expand its battery-powered air taxis into a ready-made market for its aircraft. The acquisition encompasses all of Blade's passenger business, including operations in the U.S. and Europe, as well as the Blade brand. Blade sells per-seat helicopter trips from New York City to nearby airports and resort towns. The company, which went public via SPAC 4 years ago, has not reported an annual profit since it listed. The company's shares are down 10% this year, giving it a market value of just over $300 million. And finally, Wayfair shares spiking today after the online retailer reported second quarter results that were much stronger than expected. Shares nearing a 2-year high as results point to a potential recovery in the furniture market, which has previously felt the impact of a depressed housing market and consumers opting to spend their cash on essentials. Wayfair's average order value in the second quarter was $328, up from $313 in the prior year's quarter. And as always, you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Palantir is set to report its second quarter results after the closing bell today. Joining me now, Maribel Lopez, Lopez Research founder. Maribel, this stock has continued to rocket, and the expectations have continued to be very, very high surrounding it. The challenge, I think, in many on the street's view, and I believe in your view, is the sort of balance in the company's businesses. Obviously, it has historically been very reliant on government contracts. It has grown its commercial business, but it's trying to grow it further. Do you think it can sort of rise to that challenge?
I think you hit the nail on the head right there. I think the issue is we've seen really strong overperforming growth in the government business. I still think there's upside in the government business as we look internationally. But the pace of growth in commercial really needs to accelerate if this stock is actually going to continue to have the performance that really has been priced into it at this point in time. It's an incredibly frothy AR market right now, and I think Palantir is a great example of lots of opportunity, but will the growth actually pace at what we've already valued them at?
And I guess where do you think the biggest opportunity is here? Because to your point, I mean, the expectations are so high around this stock. What do you feel like investors are looking for here? I mean, besides just the growth in commercial and, growth generally that the company is seeing, it's priced as though there is a real huge opportunity going forward for this company. What is that opportunity?
I think one thing that investors have really been focused on is, while we've been talking a lot about AI over the past couple of years, particularly in the commercial sector, we've really not seen the AI purchases yet. We're at the very beginning of that growth curve. And there's an understanding that that will fundamentally change who is going to be the next market leaders. And one of the things I think is so interesting about Palantir compared to some of the other AI bets that people are placing is the pick and shovel business has been the AI business to be in. If we're talking chips, if we're talking cloud, we're talking servers. But when you get to software, it's a lot harder to figure out what platforms are going to be successful.
So how's everyone doing so far? We got that push, holding highs,
one of the premier AI analytics companies.
SPY,
and with that government backdrop,
Tech,
people can feel a little more
IWM's
secure
the
on the
leader on
commercial
the
side
day,
buying
right?
from them.
It's
So
the
I
one
think
that's
a lot
showing more
of where we
relative
are
strength,
with
but we'll see
Palantir
where
right
it
now
ends
is that
up.
belief that there's
We
still
see
a
Amazon
fundamental
starting
hockey
to
stick
curl
growth
here,
curve
could
that we have
smack
yet to
down right
experience.
from
And in some ways, I
VWAP
agree
or
with that, but
break
this is
and
all about
push. We
timing
want to
and
see
which
the break
quarter
and push
when
for a new
how
high
many
of day.
customers. And I think we're
Apple
very
just
excited,
bottoming
and I
out
still think there's
at
going to be a drag
opening,
in
which
terms of
was
actual
pretty
commercial
interesting
adoption.
because we went
That
up
said,
about
does
2.5,
the sort of
almost
quarter by quarter
3% at the
adoption
high, but
matter
it just
less
completely
if
gave
you're a
everything up.
believer in
So
that
we'll see where it
long-term
goes.
hockey stick? So will we, I mean, even if the stock reacts, which we might very well see, does it matter less?
So I think what happens is in the short run, it doesn't matter as much. In the long run, we're looking at who the transformative companies are and who people are placing bets on. And it's pretty clear that they've made some significant inroads in the AI category. So from that perspective, I think in the long run, there's still going to be one of the premier companies. That doesn't mean it's without risk, though. So for example, we talk a lot about what's happening with Grok, for example, in government, and other opportunities for serious foundation models and players to come in and disrupt that. So they have a good foothold right now. They have to continue to maintain that and try to create a moat around it. But there are some forcing functions of other competitive pressures that might impact them in the long run as well. So it's still a little too early to say that they're going to run away with it all, but they've certainly put in a good foothold at the moment.
And speaking of competitive pressures, that brings us to one of the other companies reporting this week, AMD. And really, the competition is the story with AMD from whether we're talking about NVIDIA or whether we're talking about companies like Broadcom as well. How do you think AMD is doing, and what are the results going to show to reflect that?
Yeah, in some ways, I think this is a completely different story because from the perspective of AMD, I do think that there's tremendous growth potential for them. The question is have we been over enthusiastic? Because realistically, when people are looking for AI investments, yes, there's AI in everything, but there are a few companies you can point to that are so very discretely AI focused, right? And chips is one of those categories. Where I see the big growth for AMD is both on the lower end, which is a CPU, and on the higher end, which is the GPU market. So they actually are playing both of those games, which is relatively unique in terms of competitor that can play both of those games well right now. And one of the things they have going for them is everybody wants to create a strong competitor to NVIDIA. And we thought for a long time that was going to be Intel. We saw what's happened with Intel. There's still opportunity for Intel to come back in and be a player. But right now, people are placing a second bet. They're placing that second bet on AMD. And that makes it a very interesting stock to have.
When you look at, we've had some guests say to us, well, AMD sort of provides a cheaper alternative to NVIDIA, not just talking about the chips, but the stock itself. Right. It has gotten a little bit less so. We've seen that the stock has recovered quite a bit, especially into these earnings. So again, just like we talked about with Palantir, what would you say about the expectations for AMD at this point?
So one thing I would say has been very interesting is that recent bump in pricing that they've had on their AI GPUs, right? Significant hike in pricing, which should actually help some of the margin issue that we've been thinking about with AMD. They've typically been known as a lower cost provider. That was sort of a Trojan horse strategy to get in. But if you're pricing yourself, even, in this case, it would be somewhere between 17 to 25% less than, a basic NVIDIA Blackwell GPU, it's still a value. And when you're buying that many of them in the hyperscaler landscape, there's still a lot of opportunity. So I think that there's some levers that AMD can still provide, but no doubt there's been just a tremendous run up in AMD. And as we mentioned earlier, Palantir, there's a lot of frothiness in the market, and the actual purchases might not meet today's frothiness.
We shall see after the close today for Palantir, after the close tomorrow for AMD. Thanks, Maribel. Appreciate it.
Thank you.
Coming up, we got to look into August seasonality in the markets and stocks and translation. Stay with us.
With July coming to an end and August trading right around the corner, in today's episode of Stocks in Translation, we are taking a look at seasonality for the month of August. And again, these are just the recurring patterns that we tend to see build in the market over time, not an exact science, and sometimes these patterns shift, but this is what I'm looking at right now. So here we have each of the 12 months, January through December, and this goes back to 1990. This shows the median returns, kind of similar to an average in green bars, and then in white, those white squares there, that is the percent positive. And what you're going to see here, August, notice August, these returns are not that spectacular. It's under 0.5%. It's not negative the way September is, but in fact, it is the third worst month of the year. And we're looking at a percent positive of only about 54%. And as a background reminder, I like to see that number above 70% because stocks usually go up. So August, usually not the best month. What you want to see is what tends to happen in March, April, and May here with nice positive returns, or October, November, even December here. But if you remember, March and April were not that great this year. So that is another reminder that seasonality, sometimes seasonality gets bucked and things can intervene and markets can go their own way. And of course, the tariffs with a brand new president this year, with Trump and the tariffs, all of that took a U-turn. And this is the U that we were looking at in the market right here. This is in white, what we have seen year to date in the S&P 500. Now in blue and in green, I have two different maps. So the blue is a median since 1990. That matches what we were just looking at in that first chart. The green is another way of looking at the market and the seasonality. This goes back to 1928, and I'm only using the days when it's the same day of the week. So for instance, today is Monday, July 28th. I'm only looking at those Monday, July 28th going all the way back to 1928. So it's just a small subset of those years. But nevertheless, I found this particular way of looking at seasonality has very powerful predictive effects because it tends to track the holidays that we've seen in years past and 401k flows and all the things that affect seasonality. So what I'm seeing right here is we are right in the market right here. We tend not to have a stumble in this market model until we get to early October. And October, as I've said many times before, is prime time crash season. We actually get an uptick in volatility in September. But September, October, November are those months that you want to kind of watch out for. So now I'm going to zoom in on August alone. And I have these same two market maps that we were looking at before. Since 1928, same day of the week, that's in green here. And then since 1990, that is in blue. And what you're going to notice is we start off the month on a downbeat. That very first day tends to be historically negative. But then in both of these models, we eventually climb out from underwater. In the blue model, since 1990, it takes about half of the month, and we finally get there about 15th or 16th of the month. And then in the other model, since 1928, same day of the week, we get to positive territory a little bit earlier, and we end the month a bit higher. So we could have lackluster returns, and of course, anything could actually happen. We could have new tariff news that intervenes and takes the market down again. We could have something like a very optimistic or dovish Fed this week that sends the market higher. But in any case, I do want to close here with a bonus, and this is US dollar index seasonality. And I'm including it here because I have these two very similar models to what we were looking at before. Instead of 1990, I'm going all the way back to 1970 in blue. And then in green, I have since 1971, those years with the same day of the week. And I'm going to trace out that green. This is a model that I'm really paying attention to. It turns up right now, right at the end of July into early August, and it sends higher basically into the beginning of October here. And what is a US dollar? What does a higher US dollar mean? Well, that tends to disrupt a lot of risk markets. Sometimes it's an impediment to the sometimes it's an impediment to stocks going higher, commodities and crypto as well. And with all the bearishness on the US dollar, and I totally buy that case, I think the positioning and the sentiment is such, it's so bearish that we could actually see a strong up leg. So that's something I'm going to be on alert for in the month of August. So tune into Stocks in Translation, the podcast, for more jargon-busting deep dives. New episodes can be found on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
New high of day here on IWM. Q's trying to push
Tesla
new
board
high
is
of day
approved
on
Elon
SPY
Musk's
as
massive
well.
new
Just watch
$29
the market
billion
run.
stock award. Will that be enough to keep the CEO's focus aimed at the EV giant? Joining me now, Yahoo Finance senior autos reporter Pras Subramanian. This is less than the initial pay package that was approved and then rejected by a Delaware court. So what do we know about this one?
Sounds like it's going to address some of the issues about his focus, and it requires him to be there for a few years and devote a certain amount of time to the business, and that's sort of what people like Dan Ives are asking about in terms of what they want from Elon Musk going forward, and as the company approaches a critical phase with robotaxis and Optimus robots and all sorts of cyber cabs and all those things happening. So I think it's addressing those key issues. It's still a lot of money. I mean, I don't know any CEO making that much money in the span of 3-5 years, but yes, it is significantly less than that original pay package. It's still tied up in the court system still to this day. And they said that if one of those two gets approved, it wouldn't be a double dip situation where it would be one or the other. You couldn't get both, so that's going to address that concern too. So.
What about the sort of ongoing questions about the board independence at Tesla? Those haven't really gone away, right?
Yeah, I mean, the board is confident that Musk is going to be okay with this package. He's on the board. He's sort of his friends and everyone there.
We're not really being real anymore, but what we are doing is we're using facts
so you have to ask that question still
as a way
to whether how independent
put out
is one member who's independent.
So if you're talking to prospective students and
and there's also, of course, the cognitive dissonance between this headline, which, as we know, was sort of a retroactive pay package, and the fact that the
if they mention that they're on Be Real, it would probably
the
be a really advantageous thing to get them to do a Be Real. They can stick in their back pocket about
yes, the new Model Y out now, but
especially if there's a really great
and it was still sort of down.
picture, or they can highlight their ambassador or their tour guide. Like if there's some kind of a super cool interaction that they have mentioned that they use.
I guess for some, if you're a Tesla investor, there's kind of some certainty here that what Musk is going to be doing.
Because if students are saying they're using this for college search,
another big story that you're following here. Boeing, some of its employees poised for a strike, the second latest strike that we've seen in less than a year. Who does this affect? What do we know about
just
it?
a couple more minutes here. So,
the defense unit is their workers are striking about 3,200 workers. So this compared to 50,000 or so that are working in the commercial unit, right? So they make the F-15 fighter jet. They're supposed to make the new
kind of funny
next
to like say
generation
that
fighter,
after we just talked about using Be Real for clout.
The defense
But
business
the reality is that they actually are.
More than you can say about the commercial business right
they're
now.
looking for
It's much smaller in terms of revenue.
kind of
Only made about
crunchy, unedited, uncurated, student-created.
So it's a nice chunk, but it's not.
There's still a place for pretty
CEO Kelly Ortberg said during the earnings
while
call
wearing swag, walking down the sidewalk kind of photos. That's really more for like
impact on their business,
right?
And I think
the prospective American domestic students are looking for like
Susie
saying, oh, I just got this code and it's the best code I've ever had in my life. And the barista at the coffee couch, she made a little ghost on the top of my coffee. Like that's what they're looking for. And that's what they're going to remember. The little pros. They're going to take that tiny little bit of information back and they're going to try and recreate it for themselves when they come to the campus.
Coming up, full market coverage ahead in the second hour of Market Catalyst. Don't go anywhere.
Really kind of take this to the next level. They actually challenged their student ambassadors to write emails for them. They said, these are the 10 topics we want to cover. Write the emails. Write the emails you want to see. Write the emails that are going to make you smile. And this particular VP said that he was going to send the emails as long as they didn't have anything.
The early bird catches the gaze. This is Morning Brief Market Sunrise. Live from London, we deliver an early read on global markets. From overnight action in Asia to real-time sentiment across Europe's major trading desks and a live look at US futures. We cover the stories to help you, the individual investor, get the edge, actionable financial information and unbeatable context. So grab that coffee, tap in, and let's own the morning.
Than you and I are, right? And so if we've got students working in our offices, let's utilize them and see what we content speaking language the next generation wants to see here. And then finally, let's talk about parents. So this particular slide is, I think, especially interesting because parents are so involved. Like 98% of parents are influential in the college decision process. Only 2% are saying that they have little to no involvement in the college search process. And 58% of them are saying that they are 50-50 partners with their child. I'll tell you, when we ask the children these questions, they don't say 58%. The children say roughly 38% of them are 50-50 partners with their parents. But what matters here is that the parents say that they are 50-50 partners at a rate of 58%. When we are talking to parents, the content that they need to hear from you is a little bit different from the content they need to hear that students need to hear. Parents care about confidence, they care about reputation, they care about proximity to home, and they care about career outcomes at the end of the day. Now, one of the things I really want to highlight here is that we will be dealing with largely millennial parents. Okay? So when we think about like the parents of Gen Z versus the parents of Gen Alpha, the parents of Gen Z were largely Jacks.
It's time for Yahoo Finance's Market Minute. U.S. stocks rebounding today as traders increase bets the Federal Reserve will cut rates in September as the labor market continues to weaken. The most recent payrolls report coming in weaker than economists estimated, with major downward revisions to the May and June data. Meanwhile, Tesla has approved a $30 billion pay package for CEO Elon Musk. The new agreement includes 96 million shares of the automaker that will vest if Musk continues to serve in the top post for another 2 years. And Figma shares sliding today as the newly public company sees volatility following its IPO. The stock closing out a 250% gain on its first day of trading. Today, shares falling more than 20%. And OpenAI says ChatGPT is set to hit 700 million weekly active users, a fourfold increase from this time last year. OpenAI now counts 5 million paying business users, up from 3 million in June, as enterprises and educators embrace AI tools. And that's your Yahoo Finance Market Minute. Scan the QR code below to track the best and worst performing stocks of the trading session.
Coming up this hour on Market Catalyst. First up, weakening labor market data upping the odds for a Fed rate cut. We'll have full coverage ahead. Plus, Disney results are due out this week. We'll break down everything you need to know ahead of that report. And for today's Stocks in Translation, we'll dig into the return of the red-hot IPO market. All that and more coming up on Market Catalysts. 90 minutes to the start of U.S. trading. I'm Julie Hyman. Let's get a check of the markets now. We do see a big rebound here in stocks today following the losses from Friday. Traders ratcheting up the odds of a Fed rate cut. That's sending the Dow higher by 474 points, about a gain of 1%. The S&P up about 1.2%. The Nasdaq leading gains up about 1.5%. We are also watching the India market, and that's because we just got some headlines from President Trump that he says he'll be substantially raising the tariffs paid by India. He says this is because India has been buying what he calls massive amounts of Russian oil. And then he says they are selling it on the open market for big profits. This saying coming in a post on Truth Social. As a proxy for the India reaction, we are watching here an ETF that tracks India shares, INDA, and you can see a leg downward taken after that headline. So we'll continue to monitor that as well as the rest of the trade developments. Well, Director of the National Economic Council, Kevin Hassett, saying the firing of the Bureau of Labor Statistics Commissioner is part of a complete overhaul of that agency. President Trump calling Friday's jobs report, quote, rigged, and saying he'll pick a stellar successor as he looks to add his allies to the Bureau of Labor Statistics to ensure, quote, reliable results. Joining me now, Gus Fauché, PNC Financial Services Group Chief Economist, and Yahoo Finance Fed Correspondent Jennifer Schonberger. Thank you both for being here. Gus, I want to start with you. This has really sent shockwaves throughout the economist community. I haven't seen anyone, I don't think, who said this firing was a good idea. What's your take on it and what happens next?
The Bureau of Labor Statistics has a great and well-deserved reputation for putting out reliable statistics. There's no politics involved in the process, and I think it's unfair for the president to claim that it's rigged. It certainly sends a very bad signal for the president to fire the commissioner of the BLS. And I think the idea that he would appoint his own commissioner increases the possibility that we do get rigged numbers sometime down the line. I'm hopeful that won't be the case, but this is very disappointing. We depend on these statistics. We need to know that they are reliable and not political, and this moves us further away from that.
And Jen, it's interesting because, in fact, the just fired commissioner of the BLS had talked about that maybe budget cuts were part of the challenge in data collection. And I mean, listen, I didn't listen to all of the commentary over the weekend from Hassett and others, but it doesn't sound like with the revamp of the department that they're giving it more resources, unless I missed something.
Yeah, it certainly doesn't sound like it, Julie. But I think the core of the BLS team that needs to execute the data collection is still intact. And I would just add that the BLS commissioner does not control the data. So to the president's point, it's sort of impossible that those numbers could have been rigged. So whoever he puts in place to replace Erica, I don't know. I mean, it certainly looks political on its face, but I'm not sure how much of an impact that's really going to have here unless there is direction to slant the numbers. That remains to be seen, and that would be hard to try to dig into whether that is something that is going to be done. So if we see another weaker jobs report and we have the president's new person in place, it'll be interesting to see how the president reacts there.
Right. I mean, do you just end up firing person after person if you don't get the numbers that you want? I don't know how that plays out. But Gus, when you look at the numbers themselves from Friday, I did see some commentary this morning that they were not, in fact, as bad as they initially appeared, in part because perhaps we're seeing a labor supply issue rather than a labor demand issue. What do you think?
I think they're bad. I mean, I don't think there's any way to sugarcoat this. We saw a substantial downward revisions to job growth in April and May. We've only added about 35,000 jobs over the past few months. Is it possible that some of this is due to deportations, restricted immigration? Yes, but that just means that the economy is, not in very good shape, that it's more susceptible to a downturn if we have slower labor force growth. That weighs on economic growth over the longer run. So sure, maybe it's because of slow labor force growth due to immigration restrictions, but that is a negative in and of itself. And I think the job market now looks a lot softer than it did just last week, and it does raise increased concerns about the potential for a recession in the U.S. economy.
Jen, we did hear some of the Fed officials commenting last week and saying they were sort of leaning into that immigration narrative. What did we hear from them?
Yeah, I think Gus makes a lot of good points, Julie, but if you listen to the vice chairman of the Federal Open Market Committee, New York Fed President John Williams, he still thinks the job market is in a solid place. And we heard similar comments from the head of the Cleveland Federal Reserve as well, Beth Hammack. But to Williams' point, he is looking at the aggregate data. He's looking at initial jobless claims. He's looking at quits. He's looking at job openings. He seemed to be more concerned about the downward revisions that we received. But to the point on immigration, he does acknowledge, we are seeing a more limited labor supply. So perhaps we're dealing with a labor market here that we know it's been cooling over the past year, right? We're continuing to see the no hire, no fire economy. And you have to wonder how much uncertainty is weighing on hiring right now because of the different tariff rates we're seeing. Perhaps once we get more certainty on that, the question becomes, will we see a rebound in jobs later in the fall? But I think when it comes to, will we have a Fed cut, come September, come this fall, because of the weaker jobs report we saw, that's not necessarily a slam dunk, given what we're hearing from high-profile voices on the Federal Open Market Committee. We're seeing a Fed that's very divided over inflation, the impact of tariffs on inflation and the job market. And right now, they seem to be taking this report in stride.
Gus, what do you think? Does it, some of the folks I talked to last week on the back of the jobs report suggested that the Fed might be motivated to do a sort of catch-up cut, given how bad those numbers looked. What do you think?
I think that the weak July jobs report trumps concerns about inflation right now. I think that the labor market is clearly softer now than we thought it was just last week. The Fed is focused on their dual mandate of both maximum employment and stable prices. I think that most Fed officials think that the impact on tariffs is likely to be temporary, that we will see a reacceleration in inflation, but then it will slow again toward the end of this year. And that given the concerns about the softness in the labor market, given that monetary policy is at this point already weighing on growth, I think the Fed will go ahead and cut in September, and then we might see a couple of more rate cuts over the next few months after that.
Of course, the irony about President Trump being upset about the report is it might be the thing that pushes the Fed to do the thing he wants them to do. But Gus, I also finally want to ask you about the implications of Adriana Kugler's seat on the FOMC now being open, President Trump being able to
as we have seen a shift in jobs as it relates to foreign-born or natural-born citizens.
Bruh, everyone talking about jobs report. Come
Somebody in
on.
that position that he has full faith and confidence in is his prerogative.
Do you think that when he goes to fill the vacancy on the Fed board here following Governor Kugler's resignation on Friday, Congressman, that person, in fact, will be the Fed chair, the new Fed chair in waiting?
I don't have information one way or the other, but I do think it's important to recognize that the decisions made by the Federal Reserve are not made by any one individual. Often we see the Federal Reserve Board act with unanimity. But that may or may not be the case. And so we may see more divisions and votes. And I don't think that's an inherently bad thing for the Federal Reserve. And so it's a group of people. The key is that they are making these decisions based on the data in front of them, not based on any other ulterior motive.
Mm-hmm. Well, so when the president suggests that the person he wants to chair the Fed ultimately, and very well the person he'd like to select is the governor that replaces Kugler, that he wants them to have a low interest rate bias, Congressman, do you see that as a problem if lower interest rates may or may not be justified by the data?
Well, again, what we want is these decisions made by the Fed based on the data in front of them. Again, having disagreement or different points of view brought to the Federal Reserve Board, I don't think is an inherently negative thing. And the Federal Reserve has been criticized for decades by different administrations. President Trump just doing it more publicly than maybe President Nixon, where we found out later when the tapes were revealed. And so putting pressure on the Fed is nothing new. I think what we're seeing is just it play out in a little bit more of a public manner. Although the Federal Reserve is independent of the executive, that does not mean it's immune to criticism from the administration.
Congressman, we had a look at the town hall meeting that you held last week that got pretty chippy. There were a number of folks who were booing, and we've been talking about the potential for some confrontational town halls this August recess following the passage of the president's big, beautiful bill and, of course, the rescissions package that followed. I just want to give our listeners and viewers a taste of what you ran into the other night. Let's watch and listen.
Tell me the dire circumstances that triggered his tariff wars. Thank you.
Very good.
So, Tom, you got a veteran's hat, so out of the gates, I just want to say thank you for your service to our country. As we look at the broader tariff back and forth that's going on with the administration, this really, at its core, needs to be an opportunity to make sure that other countries are treating the United States fairly. The United States.
So a big round of booing there, and as we read in the local media, Congressman, protesters actually walked to your home with a cardboard coffin to represent the people they say would die from cuts to Medicaid. I'm just curious what your thoughts are coming out of a session like that and how you respond to these constituents.
I've done dozens and dozens of town halls across Wisconsin over the years. Media reports said that probably out of a room of roughly 400 people, there may be 30 to 50 protesters inside. Rest assured, they were loud. I don't think that group of protesters, the small group that was inside the room, were really representative of the views of most people in southeast Wisconsin. This was a group that tried to obstruct the Pledge of Allegiance, booed when we said, let's have a productive conversation. And so at the end of the day, I think what's really challenging right now across the board in the United States is a willingness to really engage in productive conversation about what needs to be done to move our country forward. And so far too often, individuals resort to disruptive tactics rather than engaging in what's really needed of a substantive conversation in a period of time where we're massively driving debt further and further up, where we have global challenges from a national security perspective, and where we've made, I think, great progress on securing the U.S.-Mexico border. And so maybe it's a point in time of reflection for the whole country to reflect and analyze how we can have a much more productive dialogue, which is going to be really essential based on the challenges that are in front of us.
Well, have you had any productive engagement around issues constituents may have around the way in which this one big beautiful bill threatens to affect them, or they're worried will affect them? Does it give you pause about any elements of the piece of legislation that you voted for?
Well, there's a lot of misinformation that's circulating on key provisions of the bill, which is why I was hoping to use this forum as an opportunity to provide folks and residents across Wisconsin better information about what's actually in the legislation that's become law. We use a number of different venues to do this, through email, telephone calls, in-person town halls just being one of the ways in which I try to communicate with folks. But there's a lot of misinformation, in particular as it relates to Medicaid. And in regards to Medicaid, what we're seeing in Wisconsin is mostly a shift towards work requirements for able-bodied childless adults. In the state of Wisconsin, that's an 80-20 issue because it's common sense that we know that we can help lift people up out of poverty as long as a job is a core component of that.
Yeah, well, look, I think that everyone deserves a lot of credit for being at that town hall on both sides of this, including you, Congressman, as a lawmaker. Making a decision to interact with constituents has not been terribly popular from what we've seen lately. And I wonder if you actually can hear from the voters who were upset about debt and deficits, seeing some $4 trillion added to ours in the so-called big, beautiful bill. There has been, I know, a conversation about coming back around to lower the debt impact of this legislation. Is that what the next move should be?
We had questions on that exact topic, and I think it's important to know that as the Washington, D.C. accountants analyze that cost, large chunks of that, or the overwhelming majority of that, is actually just simply making the 2017 tax cuts permanent. We simply built on that by providing tax relief to seniors on Social Security, those individuals working overtime or earning tips. And so the bulk of the cost is really shown up by simply doubling down and making sure that we're making permanent the 2017 tax cuts that had a real substantive positive impact on real wages for families across the state. And so it's reasonable that people can have different views on any given policy, but this is where making sure individuals have the information they need to be able to make their decisions is so absolutely essential, and why a small group of individuals who protested the town hall was a bit disappointing for the countless individuals that wanted to hear what I was trying to provide.
Congressman, we just have 30 seconds left, but when you return to Washington come September, what odds do you put around a government shutdown?
We can't allow a government shutdown to occur. I know there's a lot of my Democratic colleagues that are actually hoping that we do shut down. I don't view that as productive. I'd rather make sure that we come together, address the spending challenges we face, and do what we need to do to avoid a shutdown at the end of September.
Appreciate you joining us here from what looks like a beautiful day in Wisconsin, by the way, Congressman. We'll do this again soon, I'm sure, and certainly when you're back in the Capitol. It's Brian Stile, Republican Congressman from Wisconsin's 1st District. I'm Joe Matthew alongside Kaylee Lyons in Washington. We'll assemble our panel next as Democrats in the state of Texas flee the Lone Star State to avoid reaching a quorum that could prompt a redrawing of congressional maps. We'll have the story next on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day right now on the S&P 500 index, up another 84 points to 6322, gaining 1.4% in the back to work Monday. The Dow up 558 right now for the Dow, up 1.3%. The NASDAQ Composite Index up 371 for NASDAQ. That is a gain of 1.8%. Our Mag 7 Index up 1.9%. Equities halting a 4-day slide. S&P again up by 1.4%. The 10-year currently yielding 4.20%. The 2-year 3.69%. Gold little changed, up $8 the ounce, $33.72 right now, while West Texas Intermediate crude is down 1.5%, 66.31 on WTI. Bitcoin right now up 0.9%. Bitcoin at 115,483. Tesla has approved an interim stock award worth about $30 billion for CEO Elon Musk. It is a massive payout that is designed to keep the billionaire's attention on the automaker as a legal fight over a 2018 pay package drags on. Tesla shares, they're climbing by 1.9%. Again, recapping, S&P up 84, up 1.4% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where the town has been abuzz for weeks now about the potential of redistricting wars heading into the 2026 midterm. The talk, of course, of which began a few weeks ago when President Trump openly suggested that Texas should redraw its congressional map in order to carve out 5 more Republican seats to give the Republicans a better chance of retaining the majority in the House of Representatives. Texas, of course, began a special legislative session a few weeks ago to undertake that effort, as well as others, including the relief for the devastating floods that hit the state last month. But to take forward action on any of them, you need a quorum. 2/3 of the Texas legislature needs to actually be present in order to vote on these matters, redistricting included. And Democratic lawmakers in the state have decided not to provide that quorum as they attempt to block this Republican effort on gerrymandering, have fled to blue states like New York or even Illinois to outside of Chicago, including a Texas legislature member, James Tallarico, who we spoke with on this program 1 week ago today when we asked him about this possibility. And this is what he told us.
We've had to figure out how to use every tool in our toolbox, whether that's the rules, whether it's our platforms, or whether it is denying quorum. That's obviously a dramatic step, and it's one that shouldn't be taken lightly. My Democratic colleagues and I are willing to do whatever it takes to stop this power grab and to protect the democratic process here in Texas and around the country, because if President Trump succeeds with this power grab in Texas, I worry that he will do the same thing in every red state across the country.
That was 1 week ago here on Balance of Power. Fast forward to today, and James Tallarico is now one of 57 Democrats who's chosen to leave the state, preventing Republicans from, I should say, reaching a quorum, and therefore at least temporarily blocking this redrawing from happening. We want to get into this with Julie Fine, Bloomberg's Texas bureau chief, who has been very busy on this story now for a couple of weeks, and with us from Dallas. Julie, it's an interesting move here, but it can only go so far, right? Governor Greg Abbott can call as many special sessions as he wants. So is the effort here to simply publicize what's happening?
Well, I think the effort here is to draw attention to it, certainly. However, they are working very hard to make sure that this doesn't happen very soon. I mean, when you look at the redistricting bill, this is the first bill that has come up for the House to vote on. I think that infuriated many, knowing that it would be put on the clock so that they would have to stay there, because you leave and you have flooding on as well. So obviously this is a choice that they decided to make, and they know that Republicans will discuss that. This, Joe, you've discussed this before, is temporary, because at the end of the day, when you talk about the tools in the toolbox, one of them is not the majority. And that's what you really need to get something through here, so they can stay out. They'll draw attention to it, certainly. But I think what they're also trying to do is make sure that other states that can redistrict pay attention to what's happening.
Mm-hmm. Well, Julie, when we talk about tools in the toolbox, what about the tools available to opponents of what Democrats are doing here, like for Governor Abbott or the Attorney General Ken Paxton, who has floated the idea of arresting these lawmakers who have left the state? What real consequence could these individuals face?
Well, that certainly depends, and that would explain why they are in Illinois. That is a Democratic state, and you heard Governor Pritzker at the news conference say last night he will do everything he can to protect them. The question is when they go back to Texas. So clearly they understand that this is a risk that they are taking, but certainly the Attorney General has made it very clear that he thinks that they can be arrested. Governor Abbott now threatening their seats, talking about vacating them. So in the next few days, I think you're going to really see what direction this is headed in. This session lasts 2 more weeks.
All right, Bloomberg's Texas Bureau Chief Julie Fine, appreciate your reporting on this. Thank you so much. And as Julie mentioned, we did see the governor of Illinois, J.B. Pritzker, greeting members yesterday outside of Chicago. Let's get a taste of what he said.
Trump came up with a new scheme, rig the system, by ramming through a corrupt mid-decade redistricting plan that would steal 5 congressional seats, silencing millions of voices, especially Black and Latino voters. Let's be clear, this is not just rigging the system in Texas. It's about rigging the system against the rights of all Americans.
And for those with us on radio and not YouTube or TV, it's worth noting that jbpritzker.com was pasted multiple times as the backdrop for these remarks. So let's get into this now with our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick Davis, of course, Stone Court Capital partner and Republican strategist. Jeannie, our Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, we've talked about, or we were just talking about with Julie, how all of this is a chance for Democrats to publicize what's going on in Texas. But is it also a chance for the likes of J.B. Pritzker, a potential 2028 candidate?
It absolutely is. And I'm so glad you mentioned what was behind him, because Kayleigh, you can save democracy and raise money apparently at the same time for your run for 28. But this is really a precursor, not just to the midterms, but to 28. And you're giving a lot of state and local Democrats the chance to show Americans that they are willing to fight for them. And that is what many Democrats on the ground want. I think one of the ironies of this entire story is the fact that this is allowed because the Supreme Court said it is constitutional to politically gerrymander. And that has gotten us into this position where you now have Texas and sure to follow other states, whether California, New York, Illinois, they will try to gerrymander. And the losers here are the American public, Republican and Democrat, because what you're doing is denying people a choice at the ballot box, making our House districts less competitive. And that is anti-democratic with a small d.
I know we've seen this move before, Rick, but what kind of strategy is this here? You go to hang out with Pritzker in Chicago, Kathy Hochul in Albany. I guess some of the others are in Boston right now, but you have to come home eventually. Might have to pay fines when you do it, and then the governor simply schedules another special session. This doesn't keep anything from happening, does it?
Yeah, it's not a winning formula from what I can tell, and I don't know, but most Texans, I would think, hanging out with those Democratic leaders in Yankee states is probably not exactly a positive for them coming back to their home district. So, I mean, I can't believe that's going to work. And then on the top of it, you've got another liberal Democratic governor, Gavin Newsom, saying he's going to do the same thing they're doing in Texas. So, like, I'm sorry, sounds like you've adopted the same strategy. So why are these people hiding? I honestly don't think it's a winning issue for Democrats. Nobody's ever won an election that I can recall, you know, decrying the negative state of redistricting. I mean, even the Supreme Court says, you know what? Districts are set by political means, and that's exactly what they're talking about doing. So the likelihood that any of this is going to result in a successful lawsuit, devil's in the details, but that's been tried before, and very rarely does it succeed. So I don't know. I mean, I think this takes Democrats off their game, puts them in an awkward spot where some of the leaders are claiming to want to do the same thing, and others are harboring people who are trying to avoid it. So where are you, Democrats? Are you for this or are you against it?
Well, so let's add the voice of another Democratic governor. Rick, of course, mentioned that California Governor Gavin Newsom has floated the idea of pursuing something similar, but so too earlier today did the governor of New York, Kathy Hochul.
To refuse to stand up and fight for our democracy as we are joining in solidarity with our friends from Texas means one thing. You won't fight for democracy, you're doomed to lose it. If Republicans are willing to rewrite these rules to give themselves an advantage, then they're leaving us no choice. We must do the same. There's a phrase, you have to fight fire with fire. That is a true statement of how we're feeling right now.
Jeannie, is the more fire strategy the right one here?
Yeah, and we're hearing that strategy. You mentioned Newsom, Hochul, Pritzker, also people like Holder, who famously has been against this strategy until he is for it now. You know, the party has no choice as they see it. Once one party goes down this direction, the other one is going to follow, whether you like it or not. But I'm not sure this makes the Republicans seem strong. We've seen two examples in the last few days, to me, of Donald Trump feeling very nervous. Number one, he gets bad job numbers. He's so concerned, he fires the messenger. Number two, it doesn't seem like they feel they can win the midterm unless they rig the districts in Texas and potentially other states. So to me, I think it screams that the GOP has a bigger issue here than redistricting, which is why can't they run fairly on their message? And you were just talking to Representative Style about the difficult town calls he and I'm sure other Republicans are having as they go out to sell this wildly unpopular bill. So I think this screams concern about holding the House because the public isn't seeing what they've done so far in a positive light.
Well, it's, of course, I mean, it would potentially be an issue either way with a majority of 3 or whatever the speaker is dealing with right now. Rick, you mentioned nobody's ever won elected office beating the drum on gerrymandering. But what do you make of the potential math at hand here? Donald Trump is convinced if they redraw these maps, add 5 seats, they go red, Republicans keep the House. Is that a dangerous bet?
Yeah, it's a dangerous bet. I mean, look, historically, the party in power loses 25, 35 seats. I mean, like 5 seats in Texas in that average is not going to make a dent. And so you're spending all this political capital to maybe win 4 or 5 of those, right? I mean, like I've seen so many redistricting battles where you think you're going to pick up seats and you don't. And so at the end of the day, it's a high leverage situation. But look, he's sitting on government. He's got $200 million in his super PAC, and he's got all these options. And so why not trigger a few of these options? It's not the first out-of-cycle redistricting Texas has done, and and arguably they picked up Republican seats.
Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, many thanks to both of you for a great conversation here on the Monday edition of Balance of Power. We have breaking news coming from NATO. In fact, the U.S. ambassador to NATO is going to join us ahead on providing weapons to Ukraine. It's next on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Stocks holding very close to session highs. S&P right now up 84, 63.22 where we stand. That is a gain of 1.3%. The Dow's up 542 points for the Dow Industrials, an advance of 1.2%, while the NASDAQ Composite Index is up 376 for NASDAQ, a gain of 1.8%. The Mag 7 index up right now by 1.9%, the 10-year 4.20%, with a 2-year currently yielding 3.69%. Spot gold is up $9 the ounce, higher by 0.3%. A spot gold at $33.73 the ounce. West Texas Intermediate crude down 1.5% right now. WTI 66.32 a barrel. Workers at Boeing's St. Louis area defense factories are striking for the first time in almost 3 decades after the union rejected the company's modified contract offer. Boeing shares little changed on the day, up less than 0.1%. Joby Aviation is planning to buy helicopter rideshare operator Blade Mobility for as much as $125 million in stock or cash as the electric aviation pioneer seeks to expand its battery-powered air taxis into a ready-made market for its aircraft. Joby Aviation shares up 20.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington. Thanks for being with us on the Monday edition of Balance of Power, where we've covered some of the domestic issues that are abuzz in Washington and the greater political universe today. One being, of course, the president's ability now to appoint not just a new head of the Bureau of Labor Statistics, but also a new Federal Reserve governor, potentially impacting our economic path forward, but also, of course, the redistricting effort that the president himself is pushing in Texas. President Trump also weighed in on American Eagle and the Sydney Sweeney ad earlier today. We don't need to get into that, though. President Trump, though, not stopping there, as he threatens today to raise tariffs on India for purchases they continue to make of Russian oil. Of course, the threat to impose things like higher tariffs or secondary sanctions on countries that purchase Russian energy, part of what has been a bit of a tone shift from President Trump when it comes to Russia's ongoing war with Ukraine. That, of course, was further evidenced last month as well by an announcement that was made that the U.S. would be providing more weaponry to Ukraine, but that distribution would actually be handled by NATO, and that NATO countries, Joe, would pay for it. And today we got the announcement of the first country that is making such a purchase. It's the Netherlands.
That's right. We had a lot of questions at the time about how exactly this would work, but it's being laid out before our eyes. They're calling it PEARL, I believe is the acronym, Priority Ukraine Requirements List, a financing mechanism worth about 500 million euros, about $578 million. Indeed, the Dutch are stepping up first here, and we're lucky to have the U.S. ambassador to NATO to help us understand a little bit more about this. Matthew Whitaker is with us live from Brussels. And Ambassador, it's great to have you back on Bloomberg TV and radio. There was a reference here to Patriot missiles. Will these be essentially defensive weapons in this first tranche for Ukraine?
Yeah, well, it's good to be with you. This is obviously exciting news, something we've been working on since the announcement last month in the Oval Office, where I was there with President Trump and Secretary General Rutte. And the announcement of $578 million worth of American weapons and munitions sold to the Netherlands and then provided to Ukraine is a big step forward. And this is probably the first announcement of many that are going to be following on. But, I think should expect that, weapons and munitions obviously are defensive, especially when you're talking about Patriot missile and radar and those types of things, but you can also see that most expectedly there will be things like artillery shells and bullets and ammunition.
And how quickly will all of that, Ambassador, be in the hands of Ukraine now that this purchase has been announced?
Well, obviously we're moving out very fast, in expectation of this, and And after the announcement, the folks that are doing the logistics have already had some of this material in process. And so it's moving in the typical channels that you would expect. I just want to say that, while this announcement of the Netherlands purchasing American equipment is important, remember why they're doing this. It's because Ukraine wants American equipment. Ukraine wants our weapons and our ammunition because it's the best in the world. And, a lot of it is manufactured in the United States. And that's why, one of the things that I'm working on here in NATO is to make sure that American manufacturing continues to thrive and grow and expand. And, those are really hand in glove as to what we're doing and the work we're doing here to make sure that Europe can ultimately defend itself long term.
Well, let's talk more about that, because there was a concern about our own stockpiles here, which is why at one point, at least that was the justification by the Pentagon for halting temporarily weapons shipments to Ukraine, because we were getting down to concerning levels. At this point here, if we're in fact providing more weaponry to Ukraine, realizing that others are paying for it, is there a limit to what we can send?
Well, yes, there is. And we want to make sure that the United States is never at a strategic disadvantage or puts ourselves in a vulnerable position. And so what we're providing is what would be considered excess in addition to what we need to defend ourselves strategically. But at the same time, we're still manufacturing, whether it's missiles that go with the Patriot system, or whether it's artillery shells or everything in between. All of these armaments are continue to be manufactured in the United States and, quite frankly, all across the NATO alliance. And so we see the need in Ukraine. We then, the people at the Pentagon, especially the generals that manage a lot of these important programs, looked and determined what we could sell to our NATO allies, and then they could provide them to Ukraine.
As you see it, Ambassador, when we consider the situation in Ukraine and a war that Russia has signaled no desire to stop at this time, despite the president's consistent push for a ceasefire, are sanctions needed to supplement this further weaponry, even secondary sanctions perhaps, which the president has suggested could go into place as soon as the end of this week with the 10-day deadline he announced last week?
Yeah, well, President Trump's been clear that this war needs to end, that the death and carnage and slaughter we're seeing on the battlefield every single day, where thousands of soldiers are dying, and, of course, the attacks into some cities inside Ukraine as well, where civilians are ending up being casualties. It needs to end. There's no resolution on the battlefield. A diplomatic solution is the only way. And President Trump is creating the environment that Russia will come to the table and negotiate a ceasefire, because that's what's necessary to end the killing. And I think secondary sanctions and tariffs against those that are paying for this war, like China, India, and Brazil, by buying the oil that Russia is producing, is an obvious next step to try to bring this war to an end. And we'll see, President Trump said just the other day that Russia is very good at avoiding sanctions and evading these things. But I think this is going to really hit them where it counts, and that is in their main revenue source, which is the sale of oil to these countries. And so President Trump, is playing this card, if Russia can't negotiate a ceasefire. But at the same time, Russia just needs to end this war. They're not going to win it on the battlefield. They're making marginal, if any, gains. And they've really been struggling because of the situation on the front line. And so we just need to end this war. And I think these sanctions are the next step. But again, President Trump's going to continue to work on creating the environment that's necessary to bring Russia to the table and to get a ceasefire.
Is there anything, when we consider the weapon shipments, that we will not send to Ukraine, Ambassador? I remember the big debates that were had over the shipping of F-16s, providing M1 Abrams tanks, ATACMS missiles, and so forth. If somebody else is placing the order and doing the buying, do we care what they get?
Well, obviously, I'd say the rule number one is the United States will not make ourselves strategically vulnerable in any way. So we're not going to, cut too deep or give amounts or sell amounts that are going to put us at a strategic disadvantage. But we're going to make sure that Ukraine has everything they need to defend themselves. They have, like the way the U.S. Air defense systems especially have performed as they're every night attacked by drones and missiles and all the things that Russia is sending their way. And so, I mean, they obviously want more of those systems because they know they work and they know that they're very successful in eliminating those threats. But at the same time, you know, they need to be able to defend themselves on the front line where they're encountering the Russians and the waves of poorly trained Russian soldiers that are, you know, being paid a significant amount of money in expectation that most likely they're going to die. It's really a sad situation on the front line, and we just need to end it. President Trump sees that for what it is, and you know, let's just hope that as we take steps into August here, we can get this war to a ceasefire.
Ambassador, just quickly before we let you go, President Trump announced on Friday that he would be deploying 2 nuclear subs into an appropriate region in order to counteract what he saw as escalatory rhetoric coming from Russia. Can you confirm whether or not those subs actually have been deployed? And do NATO allies worry about that kind of escalatory move?
No, I'm not going to confirm our strategic movement of any submarines. Obviously, that's one of the many systems we have available that make us very strong as a country and provide the necessary strategic ambiguity that we can move things around. And submarines obviously are very important to what's in our arsenal, but you know, there's no reason for me to talk about any of those things right now.
Had to ask it. Matthew Whitaker, thank you so much. U.S. Ambassador to NATO. It's great to have you with us, sir, and appreciate the update here on weapons for Ukraine as we add the voice of Michelle Jamrisko, Bloomberg's White House national security editor, with us back at the table in Washington. Michelle, it's great to see you. We just kind of covered the bases with the ambassador here, but this is a pretty significant update. Having had so many questions about the way this program would work or whether it would work at all, what does it tell us that the Netherlands are first, and are there any limits to this program?
Well, that remains to be seen as so many developments in this space. I mean, I think you heard from the ambassador that it's such a sense of urgency right now. They're underscoring in terms of trying to end the war, and you see all these kind of crosshairs getting involved in this, from the trade tariffs as well, and we were talking about India earlier, and also the urgency of resources, and of course, notwithstanding the ambassador and others' hesitance to give away too much in terms of the strategy and military details. We do know that they're trying to figure out how to move these assets and to maintain support for Ukraine while also not escalating, as Kaylee mentioned.
Well, on India, the threat of higher tariffs of an amount that he did not specify, is that likely to change India's behavior, Michelle? Are they signaling they're going to stop purchasing Russian oil?
I think we're seeing the very high bar that successive U.S. presidents have dealt with in trying to persuade India on a moralistic line in terms of purchases. I mean, I can remember even 2 years ago now when we were having this conversation with Indian energy minister at the time about the Russian oil purchases and the U.S.'s disdain for it, and he had something to say about how it wasn't altruism, it's not philanthropy. They're making these purchases for their domestic population, the most populous nation in the world, on the basis of pragmatism, and they're just not going to budge right now on that.
Well, that's important because the president says they don't care how many people in Ukraine are being killed by the Russian war machine. First of all, remarkable to hear him use the phrase Russian war machine. I'm not sure we would have heard that even weeks ago. But to the point that India is being framed this way by the president would suggest that they've talked about this. Did this come up with Modi?
Well, we can't get inside, his head on the conversations he's personally had with Modi, but we do know, of course, he's had warm relations with the Indian leader for some time. I mean, dating back to campaign trail, meetings and events and that sort of thing. So it really just does, again, underscore, the toughness which India is using, their leverage and saying, no, we're not going to sway on this. And by the way, we don't appreciate, they said in a statement last hour, that the EU and the US are being somewhat hypocritical in this, and they're pointing to purchases of different goods by those two entities too, so from Russia. So there's a lot of war of words wars going on right now, and it's the India tariff deal is just one thing that's being caught in this sense of urgency that Trump has renewed over ending the war in Ukraine, that he, by the way, campaigned on finishing on day one. So we'll see.
Yep, 24 hours was a promise at one point. Michelle Jamrisco, Bloomberg White House and National Security Editor, thank you so much for joining us. We'll, of course, have more on this story coming up at 5 p.m., but get back to our other top stories as well when it comes to vacancies at the Fed, at the BLS, and, of course, redistricting efforts across the country, potentially.
Right. Democrats fleeing Texas. We'll have a lot to cover, along with a stock market that just keeps reaching higher through this earnings season. So meet us back here at 5 p.m. Eastern on the late edition of Balance of Power, only on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on TV, radio, YouTube, Bloomberg Originals. Carol Masser, Tim Stenivek is off this weekend. In the house is none other than
so
Matt
happy
Miller.
to be here.
Are you?
Yes,
You
I
have a
really
long
am.
It's a long day for you.
Well, I mean, I spend this part of my day typically listening to you and Tim.
You do.
And so
You
I'm always
message-
happy to be here.
You message in a lot, so it's really fun to have you here. We're going to talk a little bit about the trade today because we've got equity investors back, Matt. It looks like some fairly broad-based buying, although we're just turning off our best levels of the session. I don't know whether it's just people expect that Fed rate cut sooner rather than later. What are you looking at?
Well, I was looking at the gains. So we're up 1.3%, and we
okay.
were off 2% on Friday. So we still haven't made back what we lost on that day.
No, it's a really good point. All right, so we're going to talk a little bit about technology. We've got Apple's pep talk on AI. We're going to check in with Mark Gurman in just a moment. Palantir coming in with their earnings results after the closing bell. The stock has been on a tear. It's minting billionaires, so we're going to get into that a little bit later on. And then I mentioned we have a couple of C-suite execs.
Yeah, we're going to talk about how much they're using AI, their clients using AI, and we also have an interview with we'll replay an interview that Ed Ludlow did with the CEO of Joby after their acquisition of Blade.
Copter ride sharing. Generac CEO is going to be with us too as well. First up, though, let's get a check on that trading day. Let's turn things over to Charlie Ballard.
Thank you very much indeed. We are seeing stock surge. We are holding, as you mentioned, very close to session highs right now with the Dow, the S&P, NASDAQ. They are all advancing back to work Monday. Right to the numbers here. We have got the Dow Jones Industrial Average up 485 points. That is a gain there of just about 1.1%. S&P 500 index climbing now by 1.3%, while the NASDAQ Composite Index also pushing higher. Your 10-year right now, 4.20%, with a 2-year, 3.68%. So bottom line here, the Dow, the S&P, NASDAQ all advancing. Spot gold up 0.3%. We've got West Texas Intermediate crude down 1.6%. And Bitcoin right now is advancing by about 0.7%. American Eagle Outfitters shares are surging after President Trump touted the retailer's advertising campaign featuring actress Sydney Sweeney. It was the topic everybody talking about over the weekend. Shares of American Eagle right now up by 22.4%. The Post, which initially misspelled Sweeney's first name, was subsequently removed from Trump's Truth Social feed. Again, though, American Eagle right now up by 22.4%. So the Dow, the S&P, and NASDAQ all surging. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. And there will definitely be some Sweeney talk later.
She has really good genes.
And what's wrong with saying that?
No.
I don't know.
Nothing wrong with that.
I don't know. We're going to talk about it with our TV colleagues. Hey, right now we want to talk about Apple. Shares bouncing around today, up as much as 2.7%. Right now near their lows of the session, down about, still up about 0.7%. This is as analysts have been raising their price targets on the company, some 17 changing price targets, 15 raising them by an average of 4.5% following their recent earnings. We also heard about Tim Cook's AI pep talk, and there are also some concerns, which may be what's weighing on the stock a little bit today, about U.S. tariffs on India and what that may mean for Apple products. So let's get to it. Let's lay it all out. Our in-house expert is none other than Mark Gurman. He's Bloomberg News managing editor for Global Consumer Tech, and he's out there in our L.A. bureau. Hey, Mark, good to have you here with Matt and me. Lots to talk about. First of all, what do we need to know? Is there real concerns about these U.S. tariffs in India and the impact it could have on Apple? What do we need to know here?
I think long-term, yes, to a certain extent. For the time being, Apple's still in a phase right now where smartphones and other types of consumer gadgets are getting an exemption, no matter where those products are being imported into the US from. So Apple at this point is not going to have to pay those additional tariffs. No matter how high they go, we're still in exemption territory. But at some point, that smartphone exemption is going to run out. I believe it's in a couple months from now. And at that point, Apple will need to begin paying tariffs. That's not going to have an impact in all likelihood on the September quarter, but more likely on the December holiday quarter. And they have some padding in there anyways, given that it's typically their most revenue-rich quarter of the year because all the new products really come out during that period. What I will note is we're in for basically a yo-yo game here. Apple's going to have to be moving things around depending on where the tariffs are going to hit. They were very quickly able to move the majority of US iPhone production out of China into India. They'll again probably have to shift it around depending on where they're going to get the biggest savings. But at the same time, I do believe that the behind the scenes discussions between Tim Cook, the CEO of Apple, and President Trump will continue to try to get as many exemptions for as long as possible on the company's products.
Well, and President Trump has been pretty open in stating that he wants smartphones to be made in America. How much production of the iPhone do you expect to be moved to the States?
None. I mean, they'll certainly make more components. They'll certainly claim they're doing some sort of manufacturing here, maybe small items, maybe things like packaging, maybe the final component manufacturing here. But in terms of the large-scale mass manufacturing that you see happening in China and India, at this point, that's simply not replicable in the United States. Even if Apple were to claim that they can do it in the United States on a logical level, I wouldn't anticipate that being able to happen at any mainstream quantity as long as Trump is president, if his term runs out in the beginning of 2029.
All right, I want to switch gears because you've got some great stuff, Mark, on the Bloomberg and out at Bloomberg.com, your Power On newsletter. You talk about Tim Cook talking to his staff and really giving them an AI pep talk. What did you learn? What are you hearing?
So Tim Cook held a rare company-wide meeting. This is for all employees in Cupertino. The fact is earnings was a huge beat. Tim Cook wanted to come out and celebrate. Hardly anyone was anticipating 10% annual growth. I don't think that's a long-term thing. I think it's a short-lived thing because of people wanting to buy the phones before anticipated price increases. You saw a lot of people coming on TV and lying that the phones are going to go up to $3,000 or $25,000. People got scared. They ran to the stores and they bought them. Who wants to pay $3,000 for a phone anyways? That's why you saw that 10% hike. He focused on a lot of things, but my big takeaway was artificial intelligence, talking about how this is something Apple needs to be a major player in. They need to grab it, they need to own it, they need to innovate, they need to invest in. My big take from that is this was a pep talk that Tim Cook should have given 3 years ago, right? We're at the end of 2025 here. The ship has sailed on AI, and Apple is not going to be able to make a meaningful impact at this point unless they make a major acquisition or a significant partnership.
Well, don't you expect them to do one of those two things? I mean, there's so much talk about, well, I guess I read Dan Ives' notes all the time. So at least he talks about Perplexity a lot and the fact that he thinks they should buy them. And they have made partnerships, most notably with OpenAI, right?
Mm-hmm. I think what Dan Ives is writing about was my story from 2 months ago saying that Apple's having serious internal discussions about buying Perplexity. And then he put his note out multiple months after that, agreeing with my take on there. So that's what you're seeing there. But Apple is contemplating Perplexity, depending on what you see with the Google search deal. Also serious contemplation around Mistral, which is a pretty popular and famous maker of large language models and other underlying AI tech out of France. There's all sorts of complication there with the European Union and the difficulties of an American company buying a French company, especially with the Digital Markets Act and all the policies happening in that region of the world right now. But I do anticipate Apple to make a series of AI-related acquisitions. I wouldn't believe there would be anything north of 10, 15 billion. There's no Anthropic here for 60, 80 billion or anything like that. Certainly OpenAI is a pipe dream of the Apple faithful, but I anticipate them to make some maneuvers there. In that meeting, Tim Cook indicated that 40% of the new 12,000 hires that Apple has done over the past year were R&D. They're shifting around some teams within the software engineering organization to focus more predominantly on AI. So they are making the maneuvers. It's just too little too late, if you ask me.
Well, and let me just ask you, the AKI team, what do we need to know about that? And are they now in on a chatbot or a ChatGPT-like, vehicle for Apple? Because it sounds like they've gone back and forth here.
Yeah, so AKI is this new Answers, Knowledge, and Information group. The person, Robbie Walker, who was in charge of Siri was removed from him because of all the delays and multiple issues. I don't have to go through unless you have an hour, I don't have to go through the laundry list of problems with Siri, but that was taken away from him. Now he's building a new answer engine, and this is designed to be an AI-ification of search. Again, this is all prep work for the anticipated breakup of the Apple and Google search deal. Apple's going to lose billions a year on this. They need a replacement. This is a good time for a reset.
All right, good stuff. Are you okay? Are you hoarse? Were you at a concert or something? Did I miss?
I lost my voice.
Okay.
I'm all good.
At Lollapalooza. Were you at the Dead show? No, he's in LA, not in San Francisco.
As long as you're okay. All right, Mark Gurman, thank you so much. Bloomberg News Managing Editor for Global Consumer Tech out there on the West Coast. Hey, we're going to stay with big tech, and we're going to talk a little bit about Palantir. Stock's up about 4%, Matt, here, ahead of earnings. I don't know if you've looked
And it's
lately.
been on a tear.
Unbelievable.
Over 100%. It's more than doubled this year,
Yeah,
I'd say.
it's pretty amazing. All right, and we're going to get an update on the business after the close. Let's see what two members of our team have to say about it. Bloomberg Intelligence Global Head of Technology, Mandeep Singh, is here in our Bloomberg New York studio. And then we should remind that run-up in the share price has created a lot of wealth creation for folks. So we're going to get to that aspect of the story with our Dylan Sloan. He's Bloomberg News wealth reporter. Mandeep, I want to start with you. I mean, it does just seem like this one, every time we talk about it, it's often in a positive way. What are you watching out for when this company reports?
I mean, the U.S. commercial segment revenue, that is the one which has seen the most traction, given they've launched this product called AIP, which is tied to AI and use of large language models. And that segment has grown almost 70% so far this year. Everyone is expecting growth to accelerate sequentially. So anything below 75% growth would certainly be considered a miss. The whisper number is probably higher.
Below 70%.
Yes, but that's, again, a pocket of their revenues. They have a high exposure to government revenue. And look, when a company trades at 90 to 100 times sales, 9 out of 10 times, no matter what the company does, a year from now or 2 years from now, the stock will be flat. And we have numerous examples of that, Snowflake being the most notable one, which is a comparable company to Palantir. It IPO'd exactly at 100 to 120 times sales. The stock has been flat since the IPO. The company has done very well. It's grown 30, 40%. But again, the expectations get so high. And look, to my mind, OpenAI is the fastest growing company, OpenAI, Anthropic. Even those companies don't trade at 90 to 100 times sales. So what makes you think of Palantir at 40% growth, even if it's 45% going forward, should command a 90 to 100 times sales multiple?
And that's why it's created so many billionaires, right? Dylan, there are now 5, I think, billionaires who are mostly co-founders of Palantir, but one, Shyam Shankar, is the chief technology officer. So it's making a lot of people a lot of money.
Exactly, yes. So we've been tracking this at the Bloomberg Billionaires Index for about a year now, and you mentioned up 100%, I think, in the past few months. But yeah, the stock's up, almost 6-fold or so over the past 12 months. And in particular, Shyam Shankar, chief technology officer, valued his net worth for the first time. He's at $1.3 billion. And he's another example of a non-founding team member at one of these companies who has achieved $1 billion net worth, which is something that we are seeing more and more recently in the past few months. We've looked at Sundar Pichai over at Alphabet. We've looked at a number of board members and executives at NVIDIA who have joined that club too. So certainly a ton of wealth creation at Palantir up in the C-suite.
Well, and you also, it's not just, billionaires being created, but just investors in general. And you guys include that. It's the 3rd highest volume of net retail purchases for any stock, Palantir. So you see retail investors also buying in.
Exactly. Yeah. Really top to bottom. And in particular, it's interesting, looking at the senior leadership. Shankar himself is at, just over $1 billion, but some of the founders are significantly more wealthy as well. We're looking at Alex Karp, who's the CEO of the company, who, he joined the Bloomberg Billionaires Index a few months ago and is now, in the top 200 in the world. So it's really creating some serious.
Makes me want to watch and see if insiders are selling. I mean, Mandeep, when you see such, the enthusiasm, as you put out, you look at the fundamentals, you talk about price to sales, and it just kind of doesn't make sense. So any disappointment, would you anticipate? It's not like short interest is high on this one either. Investors seem to be all in.
Well, the investor base is quite interesting. In the case of Palantir, there is a big retail investor base that really loves this company. And look, software businesses are very sticky. So all their companies that are using the product, the U.S. Army, $10 billion contract with Palantir. Now, there is no finite contract duration. It's not as if the $10 billion will show up in revenue over the next 5 years. It could go beyond, but still, it's a very sticky business. So that's why software business models are so good. At the same time, it is a very expensive product. So if you're an enterprise spending $40 to $50 million on Palantir, your other option is to go on Microsoft Azure, use OpenAI and Anthropic and build it yourself for maybe less than $20 billion. So a company that is technical enough to do it on their own probably won't go for the expensive Palantir option. But still, if you're a non-tech company, Palantir gives you a very good choice in terms of a product that kind of hits the ground running out of the box. It gives you the functionality you're looking for. It makes sense of the data. So you may be willing to pay a premium price for it.
You might also be willing to pay a premium price if you've got connections to this company through the government, through the military, through the Department of Defense, right? Shankar joined the U.S. Army Reserve's Innovation Corps. So they're getting pretty cozy with the U.S. military.
Yeah, and that's a big endorsement, right? So if the U.S. military is endorsing your product, I mean, it helps you sell to large enterprises because everyone knows their product is good enough to be used by the U.S. military. So look, there are positives and negatives. My only kind of focus right now is the valuation. And I know historically, when things trade at this multiple, it doesn't end well, no matter how good the fundamentals are.
I want to come back to the CTO in just a moment, but we did see the stock take a bit of a hit last week. The information reported that the U.S. Department of Defense has been testing AI models from Microsoft and OpenAI. Yeah. So there is exposure where some of the enthusiasm, the guarantee of government contracts may not always be there.
Well, and also, you have to look at the competition. Now that everything is being reimagined in the world of large language models, Palantir is not a company that is native AI. They found a good pivot with AIP and they've been able to sell better, but there are a lot of native companies that are building on AI-based frameworks. And that's why I compare to OpenAI and Anthropic. I mean, these are some of the fastest growing companies. Even they are not trading at that valuation. So I go back to valuation because to me, there's nothing wrong with how good Palantir is doing. It's just the expectations are so high that they may not be able to satisfy them all.
Did you ever type GPTR on a given security?
I don't know that I did. Why?
You've done it, right, Dylan?
Absolutely.
Because you said you want to see if there's insider buying or selling. And I thought, well, the Bloomberg could show you that. If you do it with Palantir, you can see maximum shares sold or bought in a single transaction. They include Shyam Shankar, Peter Thiel, and $4 billion of stock was sold last year.
Yes, just last year alone, which was a really big year for insider selling. As we were covering that, it's interesting, the timing wasn't really great, to be honest. We were looking at doing some math on if these executives and board members had held on, they would be they're worth a lot more these days. But Shankar himself, personally, last year, he had been a long-term holder. He joined the company way back in 2006. They're just their 13th employee, so he's really been there a long time and held on to most of his equity, but last year, he sold, I think, around $370 million in one transaction in December. So he started unloading some of his holdings. And why wouldn't you?
And we know execs do this. Sometimes it's just part of managing their portfolio.
Yeah.
I know.
Well, sometimes you need a Rolls Royce.
Sometimes you need a Rolls Royce.
Yachts can get expensive.
Matt's here, everybody. Mandeep Singh, thank you so much, along with Bloomberg's Dylan Sloan. When we come back, we're talking with the CEO of Insight Enterprises.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ. They're holding close to session highs, off session highs, but still gains on this back to work Monday. A renewed wave of dip buying lifting stocks. Right now, the S&P 500 index up 81. That is a gain for the S&P of 1.3%. The S&P at 63.19. We've got the Dow up 493 points, now up by 1.1%. NASDAQ up 1.8%. The 10-year 4.20%, the 2-year 3.68%. Spot gold up 0.4% right now, up $13 the ounce, 33.76. And West Texas Intermediate crude oil slumping 1.2%, 68.80 for a barrel of WTI. Bitcoin up 0.8%, Bitcoin just above $115,000. Spotify shares surging after the company announced it is raising premium subscription prices across many markets outside of the United States. Spotify up right now by 6.1%. And Amazon says it is closing its Wondery podcast studio and will break up the audio services operations as part of a broad reorganization of its business. Amazon down by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. It's a Bloomberg Business Flash.
All right, Matt, I know you like to read in over the weekend, and there was a Bloomberg News story that broke over the weekend. Did you know about this?
The Joby story that Ed Ludlow put out?
Yes.
Yeah, I saw that.
Okay.
For one thing, because I'm kind of into these air taxi companies. So Joby is a plane taxi, right? Yeah. But Blade, which has really cool marketing, is a helicopter taxi. So I thought it was kind of cool that they did a
Have you done this yet?
I have not ridden on either one of them. It's very expensive, so I drive cars and take ferry boats, but someday.
TBD. Well, as we mentioned, we did get the confirmation, something that Bloomberg News did report over the weekend. Joby Aviation planning to buy the helicopter rideshare business of Blade Air Mobility for as much as $125 million in stock or cash, as the electric aviation pioneer seeks to expand its battery-powered air taxis into a ready-made market for its aircraft. Shares of Joby soaring on the news. Bloomberg Tech co-host Ed Ludlow and Caroline Hyde, the two hosts of that broadcast, caught up with JoBen Bevert. He is Joby's CEO, earlier on Bloomberg TV.
The first piece is that we're seeing unprecedented levels of regulatory support from the White House, from the DOT, from the FAA, really leaning in. You also have regulators around the world so excited about this new age of aviation. Second is where the Joby team is. We've been knocking it out of the park on certification and really delivering on manufacturing, where we're doubling our manufacturing rate. And all of this sets the stage for commercialization.
Of eVTOL.
Exactly. And the key piece is the work that Blade has done, where they've built out an incredible network of takeoff and landing locations, exclusive lounges, and an attention to detail and attention to customer service that are really unparalleled in vertical aviation. And so this is the right moment for us to partner, and both by acquiring the passenger business, but also partnering on the medical business.
JoBen, when we broke this story over the weekend, and thank you for your time and coming on the show, the question I kept asking myself was, does this accelerate the eVTOL bit to market in the United States?
Absolutely. And one of the things that's so exciting, as I mentioned, on the regulatory support that we're seeing from the administration with the recent executive order, we really see the potential where that pulls forward the timeline. And that's one of the big catalysts for why we decided to pull the trigger here on the Blade acquisition.
In the interim, will you continue operating the helicopter rideshare bit? Does that business continue, or you just buy the assets and start planning from there?
Absolutely. We're looking to not only operate it, but to grow it and turn it into much bigger business. And then we think that with the quiet aircraft that we're building, that we're going to see an explosion in the number of takeoff and landing locations that we can operate from. We're seeing real estate developers both here in the US and around the world who are so excited about our technology and are clamoring for takeoff and landing locations at their developments. And so we just see unprecedented momentum in the market today.
All right, that again is JoeBen Bevirt, Joby CEO, talking earlier with the co-hosts of Bloomberg Technology on Bloomberg TV, Ed Ludlow and Caroline Hyde. Check out the full conversation on the Bloomberg and at Bloomberg.com. We're going to stay with technology, Matt and myself. The tech solutions provider, we're talking about Insight Enterprises, reported earnings last week. Shares did come under pressure, down as much as 18% intraday, the largest intraday drop since 2009 after second quarter sales missed analyst estimates. The stock is down more than 20% year to date. We wanted to hear more about the business, the outlook, and what is going on with IT spending more broadly. Here with us is Insight Enterprises President and CEO Joyce Mullen, joining us from Chicago. Joyce, welcome to Business Week Daily. Before we get into the results, the outlook, just remind our audience about what your company does specifically and who your customer base is.
Yeah, sure. And thanks very much for having us today. Thanks for having me. You know, Insight Enterprises has been serving enterprise customers, small and medium business customers, public sector customers for 35 years or so. And we have evolved many, many different times. We announced a couple of years ago that we were creating a new category in our industry. We're calling it Solutions Integrator because we have invested not only in our hardware, in our software capabilities and skills with our partners from around the world, but also our services expertise. And what we know is that buying patterns are changing. Enterprises really are looking for results. And the way you deliver results with technology, now more than ever with AI, is by combining hardware, software, and services. So that's what we do, and we're proud to do it. And yeah, we delivered a pretty resilient quarter in a Q2, considering all the headwinds. We met our expectations and expanded profit, but yep, the market dropped our stock dropped for sure. And we're proud of the quarter we delivered. We just got to keep doing it, and it'll come back.
So why do you think the stock dropped so drastically?
Yeah, we're trying to figure that out, but you know, I think what we got to do is stay focused on delivering really strong results, expanding our margins like we've been doing, and then also making sure we take really good care of our customers. And our clients today are really focused on how do I put technology to work to deliver results fast, pragmatically, and simply. And this is what we've been focused on for a long time. We're pretty proud of the margin expansion that we saw in the quarter. We're really excited that Gartner named us as an emerging visionary in terms of all things AI. It's really the first time they've published that particular grid, and we're pretty excited about that designation, but we got to do it over and over again, and you know, we're ready to do that.
I mean, you have, Joyce, the execution down. You have amazing experience at sales and supply chain orgs, massive businesses with Dell and with Cummins before that. But you've got to be able to deal with the capital side of the business too, right? So you need to know what shareholders are thinking and what they want. Or is that not, do you think it just comes if you continue to do your work?
No, of course. I mean, we are working really, really hard to build out our capabilities organically and inorganically as this market changes. You know, I mean, I think AI presents enormous opportunities and frankly challenges. I think the traditional channel model doesn't survive an AI world where there's automated procurement and automated selling and all sorts of agents doing all kinds of work. And we are ready for that. We have been investing heavily in our own internal AI because if we're client zero for a bunch of our solutions that we've developed internally, we can also help our clients get those same results when we take them to them. And we've our number of AI assessments has quadrupled, more than quadrupled in Q2 from Q1. So we think this is really the catalyst that we've been excited about and preparing for many years. And now I think we're in a great position to deliver against those opportunities. But you know, you gotta demonstrate results every single quarter, and I think that's what we're prepared to do.
How much of it, though, is, you know, that customers, and I think this came out in the reporting following your results, that customers are just putting off new projects and they're saving for what they think they might need in AI. How much of that is going on, I guess, and impacting your business?
Yeah, we have definitely seen that, specifically, Carol, in our enterprise infrastructure business. So our infrastructure business around enterprise, our largest customers. And there's a lot of excitement around AI. There's also a whole lot of uncertainty about how to proceed. So I think our customers are looking for those no regrets moves that they can make. How do they shore up their infrastructure, but maybe don't do the data migration work quite yet because they're not sure which workloads go where? We're definitely seeing that type of hesitancy. And that's a reflection of, I don't think we're an outlier on this, but that's a reflection a little bit of just changing spending patterns in those enterprise IT budgets and making sure that people are prepared and ready to spend on the things that are going to matter most in terms of their own AI implementations.
Is it because
the good news is,
yeah, oh no, please finish. Please, of course.
I was just going to say, the good news is whether they decide they need a much more robust network or they decide they want to run a whole bunch of these large language models and smaller language models at the edge, we can help them, or they're multi-cloud, we can help them. And that's the idea. How do we turn their concerns into shorter term, pragmatic projects, deliver results fast, and earn the right to do more?
How much of this, I wanted to ask you, Joyce, is because they're smaller businesses or medium-sized business, and so I know that there's been this expectation that when it comes to AI of having on-premise facilities versus, processing when it comes to AI up in the cloud. So how much of it is it that those smaller and medium-sized businesses maybe want to have it on-premise, but they want to hold off?
Our commercial business has grown 5 years in a row. So that's that small and medium business space. We are really pleased with those results. And normally, after we come out of a downturn, the commercial business grows first, and then we see that follow in the rest of the segments. And that follow-on work is just starting to take hold in our corporate segment, but the large enterprises are usually the last to grow as we come out of a down cycle. I do feel like there's a lot more discussion about which workloads should run on-prem, which workloads should run in public clouds, and we're ready for those discussions. And we help our clients optimize multi-cloud implementations every single day. So that's a huge opportunity for us.
I just noticed the statement that the enterprise tech buying model is broken, and I wonder how you think the new model looks.
Well, I think the new model is really around those pragmatic projects that are simplified and deliver results fast is sort of the norm. That's how we buy. We don't want a big engagement that spans 7 years. We don't want $100 million contracts around our technology services and solutions. We want smaller, bite-sized chunks so we understand what the ROI is, and then we use the returns on that investment to pay for the next one and the next one and the next one. And that's how our customers are buying today. That is a pretty significant departure from kind of how customers bought technology support and services maybe 5 years ago.
All right, can I just ask you 10, 15 seconds, the pullback in spending, was it across industries or certain industries, just quickly?
Yeah, really, I would say it was more pronounced for large enterprise customers, more pronounced in those customers who serve consumers.
All right, going to leave it there. Good to check in with you. Joyce Mullen, she's Inside Enterprises President and CEO. When we come back, our view from the C-suite continues this with a company whose share price was the best performing stock in the S&P last week. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got equities pushing higher, equities halting a 4-day slide. S&P 500 index right now up by 1.3%. Tech mega caps, which have borne the brunt of recent selling, leading today's bounce. Case in point, we do have NASDAQ up 1.8%. The Bloomberg Mag 7 index up 2%. The Dow up 520 right now. That is a gain of just about 1.2%. 10-year 4.20% with a 2-year 3.68%. Spot gold is up $12 the ounce, up 0.4%, $33.75. And West Texas Intermediate crude down 1.9%, $66.08 a barrel on WTI. Tesla has approved an interim stock award worth about $30 billion for CEO Elon Musk, a massive payout meant to keep the billionaire's attention on the automaker as a legal fight over a 2018 pay package drags on. Tesla shares right now, they're gaining by 2.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really looking forward to this next guest. Generac, I don't know if you noticed, Matt, was the top performing stock in the S&P last week. It was up 25%.
And it makes a product that I think a lot of homeowners, if you don't have one already, you want your own generator. And I guess with these climate issues that we have, more and more people are pushed to buy one. Let's bring in the chairman, president, and CEO of Generac, Aaron Yachtfeld. He joins us after second quarter earnings. And I guess, you know, power gen has never been as exciting. You must be the most popular person at a cocktail party now, because it's not just a generator that people want at home, but because of the data centers and AI, everyone is talking about generating power. How's it working on your company?
Yeah, thanks for having me on today, guys. Yeah, it's like you said, it's never a dull moment when you talk about backup power. You know, every time I travel, I get on a plane, you sit down next to somebody, you do okay, what do you do? What's your job? Where do you work? I talk about Generac, and all of a sudden, you know, people are like, well, that's a product we have to have. You know, I think what we've come to find just as Americans, you know, we struggle with power quality in this country, and we have for many decades. This is not a new issue. I think, you know, what's worrisome is just the number of outages that are happening and how long they're lasting. And this is a growing problem, both for homeowners as well as businesses.
Yeah. So how much, Aaron, of your business is, me and Carol out in the suburbs, and how much of it is a company, you know, mid-size or even larger, looking to back up its data?
Yeah, about 60% of what we do is in the residential market. So that would be, you know, out in the suburbs, for homeowners who are looking for a solution for their family, for their property, protect those things. Businesses, you know, this is a business decision, right? With homeowners, it's a little bit different. It's a little bit more emotional, right? Just the loss of power and what can happen in your home. Certainly there's things that can go wrong. There's damage that can happen to your house. But largely, you know, that's an emotional decision. Whereas a business, the loss of revenue, spoilage of inventory, you know, some kind of interruption of a critical process, especially as things get more critical with in business with power, the need for that. We see about 40% of our business leaning that way, but that is a very large opportunity for us. And in particular, in some of the bigger applications where we play up in the data center market, it's an incredibly hot space.
Well, dig into that for us, Aaron. Like, how much growth are you seeing in that space? How many calls are you getting about that? Give us an idea of some of the demand and what that kind of gives you an indication of how much more that market could be for you guys.
Yeah, the market for data centers, I mean, obviously you guys cover this,
massive.
Very broadly. Yeah, it's massive, right? Like, I mean, the capital spending that is going into these facilities and all the equipment that goes alongside of them is enormous. And of course, the power needs themselves are enormous. But you can imagine the backup power, right? These are critical installations. If the facilities go down, we don't have access to the cloud. We don't have access to some of these critical things that are happening in data centers. So every single data center that goes in has emergency backup power. And so we're a relatively new entrant to this market. Our product lines have been smaller. We've served small business and smaller data centers for many, many years. The telecommunications space, and an example, is we provide backup power to a lot of the major wireless carriers out there. So this is a bit of a new space for us. We just entered it in April. We opened up our order book, and we've already booked $150 million worth of new business. We talked about that last week on our call. I I think that was part of the reaction that you saw in the stock. But we're seeing just an incredible amount of demand for these types of products.
I'm always interested in where you're building these things. And I guess you have a new facility in Beaver Dam, Wisconsin, that's supposed to open up space to build those big diesel generators, more of the big diesel generators in Oshkosh. Tell us about your manufacturing footprint, because tariffs are obviously a huge issue these days.
Absolutely. And, we've been a longstanding U.S. manufacturer. We just opened our 6th facility in the state of Wisconsin. We have 7 here stateside. Those 6 facilities in Wisconsin, a good chunk of those facilities are focused on these larger units and on the commercial and industrial products. So those products for backing up businesses. But we're also a global company. We have facilities worldwide. We have a facility in China, a facility in India, Brazil. We have 3 facilities in Europe, and 2 in Italy, 1 in Spain, have another facility down in Mexico. So, we're a global company, but we see, the demand for backup power growing, really across the globe. But we see what's going on here in the U.S. The addition of the Beaver Dam facility was a critical part of expanding additional capacity for these systems because the growth is it's enormous right now.
How much? So I look at cars all the time. Ford builds more cars in America for sale in America than any other producer. You'd think that would help them avoid tariffs, but in the end, they get absolutely crushed with tariffs on steel, tariffs on aluminum, tariffs on foreign-made parts, tariffs on magnets out of China. And it really makes up then more of a tariff hit than somebody building a car in Japan or somebody building a car in South Korea for export. Do you get hit with those kind of nickel and dime tariffs too?
We do. We use a lot of steel. We use a lot of aluminum. We use a lot of copper in every single gen set. So, in fact, it's interesting you brought up the automotive industry, Matt, because it's a real good proxy for a lot of our input costs. In terms of the components, in terms of the commodities, the things that we're exposed to. So, we have a lot of those similar exposures, and I think just like Ford and others, we're trying to do what we can to minimize the impact of tariffs, but it's difficult. I mean, we've all developed over the last 40, 50, 60 years global supply chains, right? I mean, there are areas of the world where certain components, certain commodities are only available, right? They're just not widely available in other parts of the world. So it's going to take time to recalibrate those supply chains and to try and create a more domestic manufacturing base. And I get it. I understand the need to do that, in particular around things that are associated with defense, maybe pharmaceuticals, things that are truly critical. I'm not sure, when you look at the broader base of things that we're putting tariffs on, that like tennis shoes and Barbie dolls, if that's maybe the right place to do it. I think we've got to be selective and we've got to be strategic in how we use tariffs. But I know the administration's working through all of that with all these different trade partners.
Well, some things, like magnets or rare earths out of China, we're never producing those here. It's like not an option, not in decades. So
it's challenging.
And you must use those. Are you getting enough?
We are. We're fortunate that we have the ability to kind of substitute for some of those super rare earth elements that I think are really critical in aerospace and defense. Not as critical maybe in the automotive, and in smaller quantities they are, but we have access to them today. But of course, that's a concern because, as you noted, there are only a few areas of the world where you can get those types of materials and those types of components. So it presents this is a very complicated situation, a very complicated conversation. I understand what we're trying to do, but again, I think we've got to be super strategic about how we implement these trade agreements and these tariffs.
We are talking with Aaron Yachtfield. He is Chairman, President, and CEO of Generac. Hey, a couple of things that you said I want to follow up on. You are mostly selling here in the United States, but you did talk about what you guys are doing around the world, Aaron. Does it make sense to pivot even more so international with the energy storage solutions to places like Europe and China, given that the U.S. policies are now less friendly to something like solar?
Well, those are big markets to begin with, right? So, obviously we want to be successful with our energy products, the storage products in particular, battery products. Europe is a very well-established market. The U.S., is a good market as well. But obviously the policy changes that we've now codified here recently are going to have an impact on the U.S. market for solar and for storage. Now, a lot of the things we're looking at, though, even with the loss of those incentives and the loss of support here in the U.S., the economics of putting a solar system on your rooftop, depending on where you live, as the cost of energy continues to rise, this is one of the things we've talked about. We started out talking today about the quality of power. The cost of power is another element here that needs to be talked about, because as power costs go up, and the cost of these technologies around solar and storage continue to come down, the economics, the payback, the raw economics of investing in your own power production on your rooftop or a geothermal loop or however you want to produce your own power and store some of that power continue to improve. And the loss of support, it may impact the industry for a year or two, but it will get back on track because, again, power prices are going up.
Yeah, it does feel like we're headed towards a power war, certainly here in the United States, considering the amount of power needed to really support all the AI that's going on. Having said that, you talk about these loss of these residential tax credits. You've got some new home standby generators, my understanding, is coming to market. Is that going to help offset, though, some of the loss that you are seeing from those residential tax credits, especially when it comes to your energy storage business?
Yeah, absolutely. So on the energy storage side, the loss of the credits, that's going to impact that business here short term. Our home standby business, that business it's never benefited from tax credits to begin with. So, it's the kind of thing that again, if you and Matt out in the suburbs, you want one of these products to back up your home so that, you protect your property, protect your family. There unfortunately were no tax credits available, even though the administration, when President Trump was on the campaign trail, he had mentioned maybe perhaps offering a generator tax credit. We're still waiting on that. We think that'd be smart policy, but we haven't seen it yet. It certainly wasn't in the one big beautiful bill. But those products don't have tax credits. We do have a new product line coming out, which has got some great features and benefits packed in it. But those are the kinds of products that, again, you're really buying and investing in those products to protect your home, to protect your family, to protect your business from a power outage.
No, and what I really meant is those new products kind of offsetting anything you're losing from the energy storage business because of the loss of the tax credits. One other thing I want to ask you about data centers. What about the launch that you guys are expecting of large diesel generations for data centers? What can you tell us about capacity? How much do you guys have for that? And are you investing to boost that capacity? And what is the pipeline of new orders looking like?
Yeah, so the pipeline's very strong. Again, about 150 million already booked in backlog.
Okay.
In terms of capacity, just raw capacity here, kind of globally, about a $500 million capacity number for 2026. So if we get the orders, we think we can have a really great year next year as a way to increase our commercial and industrial business. But we're already thinking about 2027 beyond. This is a market that, again, you kind of have to go back to. What do you see in terms of CapEx spending for data centers? Is this going to be is this truly a bubble? Something that in the next year or two, you're going to see a retrenchment or a retracement of all of that spending, or is this secular, right? Is this going to go on for the next decade? And we definitely, like others, believe that this is certainly a longer term trend and one worth leaning into. So we're already starting to think about adding capacity so that we can take that $500 million number to something much higher in the years ahead.
For me, it's the residential products, because this is like
Matt just wants a diesel generator.
It's like
Aaron.
a
I'm just
man
going to
cave
lay it out
toy.
for you.
Well, if you're,
what we do here is just what Matt needs to buy, and that's what this
is. Not even me, but if you're like a hedge fund guy and you just made your first, couple of million, and you're putting up a place in, Millbrook, so you can be next to Mashomick. You want to have a sweet diesel generator out back.
Well, I'll tell you, what people don't think about, right? Like if you think about your home today, and right, so you talk about that hedge fund manager or anybody else who's got a home, the amount of technology that's entered your own home, right? Think about it, like from security cameras to just from control of all of your, a lot of your audiovisual equipment, your lighting, but a lot of the safety equipment that goes in your homes, your security systems. These systems are non-operational when the power's out. We get notes from people who are like, look, I didn't even realize that my garage door wouldn't open. I've got a garage door opener, the power's out. I can't even back my car out of the garage. Everybody, if your power's out and you want to open the garage door, you got to reach up and grab that red handle, right? Nobody wants to do that ever in your garage because you don't know what's going to happen next, right? So people are like, I didn't think about it. I didn't think my sump pump.
Aaron,
what happens when your sump pump?
My husband keeps doing all these systems, like our lights. I have to turn on with like these technical systems and everything. Nothing switches or anything anymore, and it's like I fear for when the lights go out. I don't live in suburbia. I live just outside New York City, but we talk about a generator too.
There's so much.
We talk
it's
about
not
a generator
just even the food in your refrigerator, but the deer in the freezer downstairs. And
no, it's not
what happens if you can't heat the pool in the fall? You need to have what is the hottest product, Aaron? What is the thing that the dude at the end of the cul-de-sac absolutely has to have? What are you selling out of?
Well, I'll tell you, it's our 26 kilowatt home standby generator, which can cover your entire house, a good-sized home for everything you need. It's basically, if the utility goes down, you don't even notice that the utility's not present, right? I mean, you see a momentary loss of power, and then the generator starts up, and you can basically run indefinitely on a natural gas pipeline, or if you have propane at your home, you're going to be able to last a long time on a generator. And I think the other thing that we're seeing, huge trend, right, is people who have home medical equipment, GLP-1 drugs. GLP-1 drugs have to be refrigerated. Yep. So if you lose refrigeration with medications, certain kinds of medications spoil very quickly. And so, these trends, these overarching trends, for again, a lot of the medical infrastructure is starting to move into the home. We see Americans who are trying to stay independent and stay in their homes much, much longer. But a power outage, when you get older in your 60s or 70s and you lose power, it's a very different situation than if you're a younger American, 30s and 40s. It's the indoor camping. You get out the Monopoly, and everybody has fun and it's great until everybody gets sick of that after about an hour. But if you're older, I mean, the danger that comes from not being able to regulate temperature, the loss of some of the function of some of these medical devices, just not having the lights operate, as you mentioned, Carol. I mean, those are very serious situations for older Americans, and that is a huge part of our demographic for home standby generators.
Yeah, it moves from being a discretionary to a staple.
Not to mention the wine cellar.
Matt, stop.
Okay.
Aaron, he's now Googling what you just suggested, and so, there might be a purchase coming or something in Matt's future. Aaron, thank you so much. Aaron Yechfeld, he is Chairman, President, and CEO of Generac. Delighted to have him here on Bloomberg Business Week Daily. I'm Carol Massar, along with Matt Miller. Let's take a look at some stocks on the move. With us is Bloomberg News equities reporter Alexandra Semenova. Alex, everyone is talking about your first stock.
Yeah, I love when things get silly in markets, and this is a really silly one, probably a sign that investors aren't really paying attention to fundamentals right now. American Eagle shares are up 24% right now. I'm seeing that's the most since the biggest intraday move since August 2000. This is after President Donald Trump came out in support of the controversial ad with Sydney Sweeney in it. He said in a social media post that American Eagle jeans are flying off of the shelves. The ad is the hottest one out there. He also told reporters that he was very happy that she's a Republican. It seemed like this was the first time that he was hearing about the ad.
So nothing fundamentally changed in the company.
I have to say, it's not the first time he's hearing about the ad, because I was listening to his press conference on Joint Base Andrews yesterday, and what happened is a reporter yelled out, "Did you know Sydney Sweeney is a registered Republican?" And he said, "I did not know that, but that makes me very happy, and now I love the ad."
Right, and now he's a big proponent of it.
He was undecided on the ad before, which I have to say I think is just a fantastic advertisement.
It is,
but there's some people who've been upset with it.
Yeah, I mean they talk about genes in reference to genes as in like your DNA, and a lot of people have pushed back against that.
Sometimes a clever ad is just a clever ad, people.
Yeah, I mean, it's done well to bring attention to the company.
Also, look at the girl. She has great genes.
Okay, let's move on because we're running out of time. Joby, ticker JOBY, also soaring.
Yeah, so that stock right now is up a little over 20%. This is after it said it plans to buy the helicopter rideshare business of Blade Air Mobility. Blade is also up today, about 24%. The purchase is going to be $125 million in stocks or cash. This is as the electric aviation firm seeks to expand its battery-powered air taxis into ready-made market for its aircraft. The acquisition includes all of Blade's passenger business, including operations both in the U.S. and Europe. Its CEO, the CEO of Joby, said, "With the quiet aircraft we're building, we see an explosion in the number of takeoff and landing locations."
All right, good stuff. We're going to have to leave it there. Alex, thank you as always. Stock Movers Podcast. They are 5-minute episodes. Biggest winners and losers in the market. Find it on Apple, Spotify, or anywhere you get your podcast. All right, that's going to do it with the first hour of Bloomberg Business Week Daily. Coming up next, we're going to count you down to some earnings after the close. Also talk to the CFO of Wayfair.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Matt Piper. Another day of unhealthy air in the U.S. It's all because of wildfires from Canada. There are air quality alerts in 13 states from the Midwest up into the Northeast. CBS News meteorologist Grant Gilmore says the worst air in the world right now is in the U.S.
The smoke coming in from over 700 wildfires burning in south central Canada, being picked up by the upper level winds, blowing that smoke across the Midwestern states and then into the Northeast, where we once again have air quality concerns. In fact, the worst of the air quality, not just in the United States, but in the world, is right in Detroit, but still some reduced air quality across the Northeast today.
A manhunt is underway in Tennessee for a man accused of killing 4 of his family members.
Authorities in West Tennessee have now charged 3 people in the ongoing search for a 28-year-old man who's wanted in connection for the murders of 4 people a week ago. This man lives in Jackson, Tennessee, where Austin Drummond's car was found last Friday.
I thought that was crazy how you could harbor somebody, that just basically, I guess, kill his family or whatever that case was.
State and federal authorities now think Drummond may have fled West Tennessee. Jim Crisula, CBS News.
And that's not the only manhunt. The search continues now for a 4th day for the man who police say walked into a bar Friday morning, killing 3 patrons and a bartender. It happened in Anaconda, Montana, near Butte, where Jim Van Vossen lives.
This will momentarily knock us back on our heels, but this community has so many good people.
Many Texas state lawmakers have scattered nationwide in an effort to prevent a vote on new redistricting maps that would favor Republicans ahead of the 2026 midterm elections. CBS's Nadia Cavazos says it could pave the way for the other side of the political aisle to do the same thing in other states.
This isn't just the Texas matter, but this is a situation that does have national implications. And we've seen that Democrats in other states like California and New York are now saying that they're willing to fight fire with fire. Governor Gavin Newsom in California has promised that he will be redrawing the congressional lines here that will benefit Democrats. And we heard this morning from New York's governor saying she is willing to do the exact same thing.
If you think you've heard this one before, it's because you have. Thousands of Boeing workers are on strike because they did not like a new contract offer that included a 20% wage increase.
It's nerve-wracking because I don't know where my income's going to come in for the time being. I mean, some of us are going to have to go find second jobs, and hopefully you can find second jobs.
There was a similar walkout just last year. For the first time in its 90-year history, all major casinos along the Las Vegas Strip are now unionized. This is CBS News. Artificial intelligence is being used at car dealerships to spot safety and maintenance issues.
At Earnhardt Chevrolet, just outside Phoenix.
It's like an MRI for the vehicle.
The dealership is utilizing artificial intelligence with a high-tech scanner to catch every angle of a vehicle. Sales manager Dave Flores.
What we're looking for is any oil leaks, oil seepage, any broken shields.
The system got its start far from the automotive industry.
It actually started in Israel, made for bomb detection.
Hertz is using the technology to scan returned car rentals. Stefan Kaufman, CBS News, Prescott, Arizona.
A zoo in Denmark is asking the public for donations of unwanted small pets or horses to feed its captive predators. The zoo says chickens, rabbits, and guinea pigs are an important part of the diet of its predators, which they say need whole prey as if they were hunting in the wild. Matt Piper, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away from the closing bell on this Monday, August 4th, 2025. Carol Master along with Matt Miller. Tim is off this week, getting a nice little summer break here.
Yeah, I'm excited to be filling in for Tim. And then I also found out that
Matt is usually emailing.
I'm usually listening, and
Yes.
I write in all the time.
A lot.
We have a group chat that Carol doesn't pay attention to, but Tim reads. But no, next week I'm going to take a couple of days,
true.
go out to the lake, and I need Tim to fill in for me.
Oh.
On my program, which
Tim,
is weekdays from 9 a.m.
if you're
to 11
listening-
a.m. Bloomberg Open Interest.
Little plug there. He's also co-host with Hannah Elliott of the Hot Pursuit podcast, which is really cool too.
True. If you like cars,
Listen.
if you care about cars,
Yes.
and I'm not talking about really the business of cars so much as the love of cars.
Yeah.
Listen to our podcast, Hot Pursuit, with me and Hannah Elliott.
All right, we're going to talk with the CFO of Wayfair, get a read on small business, and so much more. It's all coming your way over the next 2 hours. Right now, here's a look at the trade with Charlie Pellet.
All right, thank you very much. 54 minutes to go until that closing bell clangs on Wall Street with the Dow, the S&P, NASDAQ holding close to session highs. 79-point gain this Monday in the S&P 500 index at 6317. That is an advance of 1.3%. The Dow up 519 now, higher by just about 1.2%, while NASDAQ is up 1.75%, and the Bloomberg Mag 7 index up 1.9%. Our Russell 2000 index climbing by 1.8%. Spot gold up $13 the ounce, up by about 0.4%. The 10-year, by the way, 4.19%. The 2-year, 3.67%. West Texas Intermediate crude is retreating 1.7%. 66.21 a barrel on WTI. Bottom line here, we've got equities halting a 4-day slide, a wave of dip buying lifting stocks. As for the overall market backdrop, Rayanne Mitrione is a partner at Callan Family Office. She was interviewed this morning on Bloomberg Surveillance.
It hasn't been a market where everything has been moving up the same. So even though we're seeing good returns and new market highs as recently as a week ago, it's different in different places. So there's still opportunity for some stocks that have lagged to catch up, and there's still opportunities.
Rayanne Mitrione interviewed on Surveillance. On an update for the U.S. stock market, we've got Boeing, a little change. They do have a strike underway. Boeing up now by just about 0.2%. Workers at Boeing St. Louis area defense factories are striking for the first time in almost 3 decades. And as we have been reporting, Joby Aviation planning to buy helicopter rideshare operator Blade Mobility for as much as $125 million in stock or cash. Right now, Joby higher by 20.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get straight to our next guest, whose company is based in Wellington, New Zealand. We, though, head to San Francisco and to Sukhinder Singh Cassidy, CEO of the global small business platform Xero. She, by the way, former president of StubHub and has worked at various technology companies and media companies. We're talking about Google, Amazon, also News Corp, and so much more. Sukhinder, so great to have you here with Matt and myself. How are you?
Good, good. Good to be with you both again. How are you?
We're doing okay, trying to keep up with the news flow out of Washington and just in general. So let's start macro with you. Give us your take on what you are seeing in terms of the global economy and also the U.S. tariff trade war. What impact, if any, is it having on your business?
Well, as you know, we service over 4.4 million small business subscribers globally across Australia, New Zealand, the US, the UK, South Africa, Canada, and more. And I'd say what we're seeing is a continued, I'd say, cautious, resilient small business economy despite the macro uncertainty. And so, as you can appreciate, we see across the board continued concerns about inflation, taxes, tariffs. And yet we have chronically low still unemployment in this sector. And I would say slow wage growth and sales growth sort of low to flat. So overall, we see a relatively resilient small business player despite the macro uncertainty. Now, that doesn't mean we don't need to, as kind of vendors to this market, make sure that they thrive. And that is always what we seek to do at Xero.
So you're doing any kind of accounting that a small or medium-sized business will need, like payroll processing, bill payment, financial reporting, et cetera. And now you're buying, is it Melio? It's a big deal, $2.5 billion. They are in a similar area, invoice management, payment scheduling, cash flow control. What's that deal all about?
Well, sure. So first of all, thank you for asking. Xero is a cloud native accounting platform that small businesses can use alone or with their advisors, be that a CFO externally, a fractional CFO, an accounting and bookkeeping firm. And so what we have added with the acquisition of Melio, which is, as you pointed out, a leading bill pay player in the US who services small businesses, is the ability to drive that bill pay and invoicing business on Xero, which is one of our, we would say, one of our biggest jobs to be done, and one of the fastest growing areas of our platform. The platform also allows people to get paid and get paid. In many countries, excluding the US, we do income tax as well. In the US, we support sales tax payments, and then in the UK, things like full income tax, VAT, sales value added tax. So really think of us as a system of record for small businesses that enable multiple insights and actions across that suite of financial operations. And Melio really bolsters that in a big way in the US.
What's the end game for you guys in terms of US exposure? How much do you want your top line growth, your margin expansion to be coming from the United States?
Well, I think you hit the nail on the head. The U.S. is one of our fastest growing businesses, but one of our smaller businesses historically. With the addition of Melio, we take our business up to almost 500,000 subscribers in the U.S. The combined business will have that, and it's 4 times our revenue size, so almost $250 million in revenues in the U.S. And we see significant acceleration of our top line U.S. growth with this acquisition. So I think it's fair to say we have a product that's actually loved by SMBs and by accountants and bookkeepers in the U.S., but we really want to multiply the size of that platform with the acquisition of Melio.
How big would you like it to be in terms of your exposure in the
we don't
US?
have a revenue guidance, but the company, just to be clear, globally does over $2 billion New Zealand in sales. We've said that by 2028, we can see the company double in size again from our current levels with a significant expansion in U.S. growth. Sorry for the dog background. Welcome to hybrid.
Well, so Sukhinder, just so people know, and Carol mentioned, you were president of StubHub. You oversaw a big sale there. I think it was like a $4 billion sale at the time. You massively scaled before that Google's Asia Pac operations, right? And I think up to 2,000 employees. What's the goal for you at this company? I mean,
where
do you think you can get, having had that stellar experience?
Well, first of all, I think our ambitions at Xero are large. We are one of the largest accounting players globally, despite the fact that we come from Wellington, New Zealand. Obviously, I'm based here in Silicon Valley and have spent most of my career here. So we are global already. I think our ambitions are to capture the full opportunity of SMB digitization, of helping those SMBs thrive by being their global system of record partner. And increasingly with AI, not just their system of record, but their system of action. So right now, the business is, as I said, north of $2.5 billion in revenue. It grows year. We're profitable. We see an opportunity to accelerate that vision with generative AI and really help small businesses not just get better insights, but take action. And as you know, that is a big market globally. So I think there's no shortage of ambition for Xero. We consider ourselves very much in still the early innings of SMB, small businesses, digitizing that back office and increasingly taking action on those insights using AI and hopefully Xero alongside that.
By the way, you mentioned, I think, 4.4 million clients. And Carol, you know, asked for your macro view because you're in such a great position to give us a read on SMBs. What about if you focus just in on the U.S.? After the disappointing jobs numbers, I mean, we think they were disappointing if you believe the data. How does the U.S. economy look to you for SMBs?
Well, you know, even in the US, believe it or not, all the indications are that resilient but uncertain. So if you look at the National Federation of Small Business Optimism Index from June 2025, the index was sitting just at about 98.6, so pretty short of its 51-year average, or just slightly short of its 51-year average. And you see kind of owners citing taxes, inflation, labor, and yet sales are holding okay. So I think this U.S. small business is definitely, I'd say, concerned about the effects of tariffs, inflation, taxes, and what the administration might do, but holding steady. Now, I can tell you one thing every small business needs, whether in the U.S. or elsewhere, is they need to be paid on time. Actually, the chronic issue in times of uncertainty is not just how you manage prices and inflations on one side and supply chain disruption on the other. It's how you manage cash flow, which is really about getting paid on time. So the one thing every one of the big businesses listening to this call can do is help manage their supplier payments to small businesses, because that is the chronic issue, which is particularly heightened in times of uncertainty when they might be putting the brakes also or slowing down on investment in CapEx. We do see that, by the way, you know, being cautious on investments.
Any signs that it looks like they're so concerned in terms of maybe a recession or stagflation?
You know, none of the macro indicators are telling us that. The same indicators you see and we see are not telling us, yes, that they are in recession mode, but I would say they are cautious. And I think, you know, if you think about the lifeblood of any small business, it's managing, you know, this month's cash flow, this quarter's cash flow, this quarter's investment decisions, you know, making sure you're not extended on inventory or so on. So I think the first thing you see is, as I say, cautiousness with regard to long-term investments. But I think it is a relatively resilient SMB market right now, though uncertain.
One thing I wanted to ask you, your stock doesn't trade in the United States. Are there plans as you increase your exposure in the U.S. that you have a listing here?
You know, we haven't announced any immediate plans, but I think you've hit the nail on the head. Although we trade on the ASX, we are a foreign issuer on that exchange, and we do have plenty of U.S. shareholders. We're held by a lot of the major passive funds and then actives as well. So, of course, we're going to keep growing that global footprint. We wouldn't rule out at some point considering whether or not we need to also list elsewhere, but no plans currently, and very happy with where we trade today.
I gotta say, she's one of the most international guests we've ever had.
I
was just
know.
looking through your
So great.
CV, like born in Tanzania, grew up in Canada, your business is in New Zealand, you did the Google business in LATAM and Asia Pac. It's like you're all over the place. We got to get her back on.
Come back soon. Already looking forward to it. Sukhinder Singh Cassidy, CEO of Xero, the global small business platform. Coming up next, we're going to continue with our C-suite focus today. Shares of Wayfair soaring. We're going to check in with the CFO about the business. That's next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks holding near session highs. 39 minutes to go ahead of the closing bell with the Dow. The
Sheesh, 39 minutes to go. Market made new high a day, carried by IWM.
Dow up 588 points, up 1.4%. Dip buyers coming back into the market. NASDAQ up 384, up now by just about 1.9%. Our Mag 7 index pushing higher by 2%, with a 10-year at 4.20% and the 2-year 3.68%. Gold up $12 the ounce, up 0.4%, 33.75 where we stand on the precious metal. West Texas Intermediate crude, though, slumping 1.7%, 66.16 for a barrel of WTI. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets. She told us she is keeping an eye on the calendar.
August is kind of mixed. September and October tend to be bad. And if you went back and looked at the 2018 trade war, that post-Labor Day period was when investors really started to get concerned based on what they were hearing from companies about the ripple effects of that trade war. So I've got all that in the back of my head.
Lori Calvasina of RBC Capital Markets. Coming up after the close of trading, we'll be getting the latest quarterly numbers from Lattice Semiconductor and Palantir. Lattice ahead of earnings, down 0.4%. Palantir ahead of earnings, up by 4.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Matt Miller. Matt in for Tim Stenevec, who is off this week. We're watching the markets. Charlie, of course, just breaking it down. Hey, one name that is definitely outperforming in a big way in today's session, that is Wayfair. Stock is up about 12.8% as we speak, so pretty much hovering near its highs of this session. This after the company came out and reported second quarter results that were much stronger than expected. Our Bloomberg Intelligence, Poonam Goyal, putting out a research note saying Wayfair's second quarter heat looks to stay hot in the third quarter. So let's get to it. Let's hear about the business. Kate Gulliver is back with us. She's Chief Financial Officer of Wayfair, and she joins us once again from Boston. Kate, how are you?
Fine, thanks. We're thrilled with the quarter, so happy to be here.
Well, talk to us. I mean, investors are thrilled as well. Talk to us about the quarter and what you guys saw and where the growth was.
Yeah, I think you really saw two key things happening. So first, on the top line, our share gains continued to manifest and really accelerate, and that led to that 5% top line, 6%, adjusting for the German business comp. So that's pretty exciting for us. And then what you saw is a really nice flow through of that revenue to adjusted EBITDA, crossing that 200 mark, 205 of adjusted EBITDA. And I think that really shows the strength of the model and the efficiency of the cost takeouts over the last several years. So to have the nice revenue momentum, the share gains paired with that cost efficiency, for many quarters, we said you should see that really significant flow through when that happens. And indeed, that manifested in the second quarter.
Kate, whenever I ask someone about the stock price and it doesn't look great, they always say, well, we're focused on doing business here and we don't care about the shares. But you got to care about them on some level, especially as a CFO. So, you've had an incredible year. Year to date, you're up like 66%. But if I bring the chart out to, the COVID highs, you still have a long way to get back there. I think you're down 70 some percent from your 2021 highs. Is that going to happen, you think, at Wayfair, or was that just, like la land levels in the pandemic?
Well, now we're focused on operating the business. But
sure.
let me unpack it a little bit for you, because the reason you probably hear that answer is at the end of the day, we do believe that the valuation and sort of where investors see the business should, over the long run, follow the performance that we drive here at the company. And so our focus actually really is on how do we continue to take share and how do we continue to flow through that revenue into adjusted EBITDA dollars, into free cash flow growth, and into, a metric that we look at where we call owner's earnings, which is that EBITDA less our CapEx expense, less our stock-based compensation. And we do want to continue to build on that over time, and we think we can. And as we continue to grow the top line, as we continue to grow those adjusted EBITDA dollars, I firmly believe that the valuation will follow.
But revenue,
just
go ahead. Can it get back to that Or was that just like everybody locked in at home and the government throwing money at American citizens? Is that why revenue climbed so high during the pandemic? Or can you get back to that level?
Yeah, so if you think about the category itself, obviously the category itself had a very unique period during the pandemic where growth accelerated in the category in 2020 and into 2021. The category has had significant pullback since then in 22, 23, 24, and even still a bit in 25. We would say we think the category is sort of flat to slightly down, low single digits in the past quarter. So the category is still under quite a bit of pressure. Can the category return to a normalized level of growth? Of course, right? The category in a normalized period grows, sort of 3 to 4%, the overall home goods category. And we do believe that we can return to double-digit growth over time, where we significantly outpace the category. That's what we did for the majority of our history, significantly preceding the pandemic. And it's what we expect to do, as the category returns to normalization. So, can we ever get to the revenue that we had during the pandemic? Absolutely. We're quite confident in our ability to do that.
You mentioned earlier about cost efficiencies of the model. What specifically?
Yeah, so over the last few years, we've been quite focused on a few things. One has been improving our overall sort of total overhead cost structure. That manifests in that SOTG&A line in the P&L. And I would think about that as really our fixed cost basis. The majority of that line is labor. And so we have had a number of restructurings where we've reduced labor cost. And that has shown up in that line. And we've said that where that line is right now, at that $360 to $370 million point, it should be able to hold there for some time, even as we continue to grow the top line, we get ongoing efficiency from labor, and as we, sort of continue to see the benefits of some of the growth investments that we've made. So that's one big area of cost management. We also have been improving our sort of structural gross margin. So we took out, costs in our supply chain, and that's really helped our gross margin. And we've added some supplier services like supplier advertising, which have helped improve that gross margin as well. We've reinvested, a significant portion of that back in the customer experience in the form of price, in the form of delivery experience. And so we've held that gross margin at 30 to 31, but structurally we've been able to drive it higher and instead give it back to the consumer and then flow that through and ultimately, cover off on that fixed cost basis.
I wonder how you deal with tariffs because you have so many suppliers, but furniture making in the United States of America is far from its peak these days. So, do you get suppliers to kind of eat that? Are you taking some of it into your margin, and how much are you passing on to the consumer?
Yeah, what we talked about actually, in May, when Carol and I spoke before, was that we thought the benefits of our marketplace model would help us manage the tariffs. And that's because we are able, as you point out, Matt, we source from over 20,000 suppliers, right? So we were able to have a very wide range of goods with suppliers from all over the world, including some from the US. And we're able to then position within a given class or category, say like this chair that I'm sitting on now, we're able to position the products that we believe are best for the consumer. So most price competitive, can get to her quickly, are high quality. We're able to position that first in the sort order among many very similar products. So if a product gets relatively more expensive, other products will then move up within the sort order so the consumer is able to see the product that is most price competitive. And that means there's a tension within the marketplace where suppliers actually want to maintain their price competitiveness. They do not want to lose that volume, particularly in a category, as we spoke about earlier, that's been under pressure for some time. And you're seeing that pan out. So what we said on the call this morning was, on a like-for-like basis, for the products that are on those first few pages of the sort order, when you search for, sort of lounge chair, you're going to continue to see, and you are seeing, prices relatively stable on those first few pages. And that means that the products that the consumers are buying, they're not yet seeing, pricing changes flow through. And I do think that's due to the, breadth of suppliers that we work with and the competitive nature of the marketplace.
We are talking with Kate Gulliver. She's the Chief Financial Officer of Wayfair, joining us from Boston. Hey, Kate, so what do you know about the type of shopping that consumers are doing? When they're buying, are they buying more items? Are they buying fewer items? Give us some idea in terms of some of the trends that you're seeing in terms of the actual shopping going on.
Yeah, it's a great question. So when we think about our average order value, or AOV, that's really comprised of three different pieces. One is like-for-like pricing, like we just spoke about. One is items per order, to the question you just asked. And then last piece is mix. And we actually are seeing a little bit movement on items per order and mix. So on items per order, we're seeing a little bit of increase, nothing major, but sort of moderate. But where we're really seeing momentum is on mix. And what we mean there is that we're seeing mixing in brands of ours that are actually sort of higher value. So Paragold, which is our highest end, our luxury brand, we're seeing ongoing really nice momentum there. Our specialty retail brands, so All Modern, Joss & Main, Birch Lane, again, these operate a little bit above that mass segment that the Wayfair.com business operates at. Those are also seeing nice momentum. And then our B2B business, where we sell, to professionals and the trade, we're seeing nice momentum there. All of these are much higher ticket values than the sort of core Wayfair.com business. The other thing I'd add is, we're obviously newer to the physical retail game. We have our first sort of large format Wayfair store opened a little over a year ago. And we're seeing nice momentum in categories like storage and org and small kitchen accessories in the physical space as well.
Do you want to keep continuing to add in terms of the physical stores? I know you guys have some more expansion going on.
Yeah, no, great question. We're thrilled with the performance of that Chicago store. Really two key things that we see there. One is the halo effect, so the sales that we get in the surrounding region from having the store there. And then two, within the store, we're seeing nice momentum in categories that, maybe sort of underpunch a little bit online, like storage and order, kitchen accessories, small appliances, that kind of thing. And so as we look at it, we see significant opportunity from a growth perspective in expanding stores. We've actually announced 3 additional leases. 2 will open in 2026, one in Atlanta and one in Denver. That's our first store in sort of the Mountain West region, so we're very excited about that. And then early 27, we have a store opening in Yonkers, New York. So you can see us starting to build some of the momentum here. That'll be a little closer to home for you guys.
Yeah. Hey, Kay, I wonder about your view on rates, because maybe if you're buying just one chair or a side table, you can afford that. But I'm sure a lot of Americans are putting stuff on a plan or borrowing money. And today the 10-year is pretty low, but the idea, I think, is that rates are going to tend to go up from here. What's your view?
Just got about 30 seconds, Kate.
Yeah, I would actually say in our business, actually, the average order size is only around $300. So, rates have an impact on the consumer overall in terms of the housing market. In terms of her purchasing with us, it's, largely not financed.
All right, gonna leave it there. Always fun to check in with you and get a really great view of what's going on with the consumer. Kate, be well. Kate Gulliver, she's the Chief Financial Officer of Wayfair. Of course, ticker is W, and I'm pulling it up on my Bloomberg. We are seeing this stock, investors moving into it in a big way, up about 12.2%. Yes, way down.
Ticker is just W.
W, that's what I said.
Oh, I thought you said WN.
No, I don't. Did I? No, I don't think so. If it was a mistake. Hey, Bill Smead is coming up next. We're going to talk about some of his picks and more. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 20 minutes to go ahead of the closing bell. 20 minutes until we do get earnings out of Lattice and also out of Palantir. Stocks are higher right now. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Good afternoon, Charlie. That's right. U.S. stocks with an aggressive bounce after Friday's sell-off, with the Dow currently up 557 points. The S&Ps are higher by 83, while the Nasdaq is up by 1.7%. The U.S. 10-year yield is at 4.2%. Gold is in the green, oil is in the red, and Bitcoin, that's higher by 0.6%. Among the main 11 S&P sectors, leaders were tech and telecom. Only energy was in the red, and leaders to the upside in the Dow, NVIDIA and Goldman Sachs, while Amazon fell 1% and led to the downside. After earnings on, Semi fell 14%. And regarding IPOs, recent IPO Figma plunged 24% today. Wrapping things up, Palantir reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just got about 18, 19 minutes until we wrap up the trading day on this Monday, August 4th. Carol Master along with Matt Miller in for Tim Stanovic on this Monday. You heard Charlie and Bill giving you an update on the trade. We've got a bit of a rally underway, and we're up about 1.7% on the NASDAQ 100, a gain of just about 1 1/3% on the S&P 500. Curious to see what Bill Smead has to say about all of it. He's chairman and chief investment officer of Smead Capital Management. They've got roughly $5.6 billion in assets under management. The Smead Value Fund, it is down about 3% year to date, but has returned on average about 14% annually in the past 5 years. And the international value, Matt, I don't know if you noticed, is up about 21% year to date, so beating about 2/3 of its peers. Take a 5-year perspective, and it's beat just about all of its peers, returning on average 22% annually.
Yeah, and international has been crushing it this year. Interesting, because I talk to Bill's son all the time.
We do too, Cole.
But I'm chatting with him on IB like every day. And we're always talking about America. So it's interesting, Bill, to hear that you guys are doing well internationally. I got to ask first, though, about Portland. You're in Portland right now. You guys are usually in Phoenix. I just took a look, and Portland's got a nice semi-cloudy day, like 72 degrees. In Phoenix, it's 112. How much nicer is it in Portland?
Well, we have a summer home up here. So we've joined many Phoenicians by getting out of Dodge for about 70 days.
Makes sense. 112 degrees would be... For me, it would be rough.
I have to say I have family in Phoenix, and they used to come east for the summer months, or at least the kids did.
They always say it's a dry heat, but
hot.
that doesn't change how hot it is.
It's hot.
All right, so Bill, you guys have done well internationally. What's your focus on over there, and how do you gather your intel for international investments?
Well, there's a lot more spade work because in the U.S. fund, we deal a lot with things that we know a lot about and have interacted a lot with. And that's somewhat true on an international basis, but it's a lot of the same themes. We look for wonderful companies that are deeply out of favor, and it just so happens that the weakness in the dollar is causing the favor to come to those international companies a little easier than it does in the United States, where the dollar is strong.
Do you think that's going to continue in terms of the international returns or outperformance here?
Oh, it would seem obvious. The gap got the largest it's been, almost in 25 years. So the gap, anybody that doesn't have the Magnificent Seven in their index looks relatively poor. This is biggest undervaluation in the U.S. of value versus growth. It's the biggest spread of momentum to anything. and therefore there was just lots of opportunity. There is lots of opportunity because these kind of things have a tendency to last for quite a while, and the international on a relative basis is just getting going.
Meanwhile, back here at home, you've drawn parallels to the incredibly narrow leadership that we have, right? The Mag 7 profits, Goldman Sachs said today, are going to grow 26%, whereas the rest of the S&P, the 493, are posting only 4% profit growth. You've drawn parallels between the narrow leadership we have now and 1987. That's a little bit spooky. How do you get there?
Well, you know, what happened was there was a huge bull market from 82 to 87, and it got to where late in it, it got narrow, and it was kind of built around who Drexel Burnham was going to help get bought out, right? The R.J. Nabisco and some of those kind of things. So what we've got here is the biggest momentum trade of my 45 years in the business. And you don't get to know when it's going to end, but to be successful over the next 5 to 10 years, you're going to need to be in things that don't get caught in the outcropping of where this dies. And the signs of it dying are already there. Cole wrote a piece the other day just talking about how we loved these Magnificent Seven companies because they didn't have to put a lot of CapEx. They didn't have to reinvest a lot of their profits in the business, the Metas and the Googles and people like that. But now they're in a space race. They're in a race to see who can outspend each other. And when I saw somebody was offering an employee $200 million to go to work for them, I thought, okay, we're now at the kind of the goofy point.
So, okay, not so interesting.
It's silly season. I mean, it absolutely has to be silly season.
Listen, and this is what we're trying to figure out, right? But it does feel certainly lofty at this point.
Facebook is going to spend $20 billion just on compensation. That's not CapEx. That's OpEx.
Well, does this make you like something like Apple more so because they haven't, you know, run into that AI spend? I mean, everybody's criticizing them that they're behind the game on that, but they're not doing that big spend, at least not yet.
Well, this is not stock wise, but I don't like Apple because they're stalking me. And I don't like to be stalked. But anyway, that's a separate subject. You know, Apple it is a consumer products thing, and whether they're enhanced or invaded by AI, I don't know. But the bottom line is you can't make superior returns over a 10-year time frame from owning the best performing stocks of the prior 10 or 20 years. Mm-hmm. We've looked all through the decades. RCA wasn't the place to be after 1929, and Intel and Cisco have never made a new high from their 99-2000 peak. So Microsoft did get back to even after 15 years. So the problem isn't, can these work for another year or two? Yes, it's possible they can work for another year or two. But when it's over is when the problem starts, and we have got the biggest concentration of not only in the S&P, but that means in everyone's portfolio. Almost everyone in the United States has got their portfolio built around the S&P, and the S&P is built around them. So if the S&P does poorly, those will get sold.
We're now 10 minutes away from market close. Thank you, everybody that's been sticking around.
A miserable, unvirtuous circle.
Bill Smead, 30 seconds here. We got to ask you, because everybody's like kind of looking at us. How is Apple stalking you?
I'll be talking to somebody about something, and the next thing I know, some kind of an advertisement will pop up on my phone for that subject.
Yeah, that happens to us too. I mean, I imagine, Carol, happens to you,
right?
It
happens across. Yeah, it happens across everything.
It helps me shop.
We should point out that you also like Diamondback Energy. I know they're reporting after the close today, and D.R. Horton. We're running out of time. It just means, Bill, we're going to have to get you back real soon. Bill Smead, Chief Investment Officer, and so much more over at Smead Capital Management, joining us from Portland, Oregon on this Monday. Stick around, everybody. We're heading over to our TV colleagues. We're counting you down to the close on this Monday. Carol Master, Matt Miller, and this is Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we've got under 7 minutes to go until we wrap up the trade on this Monday. Tim, as you know, is off. Matt's in the house with me, and we're going to head over to our TV colleagues, and we'll talk about some earnings as well. What do you want to talk about? You know, there's a most read story in the Bloomberg we did not get to. Anytime we talk about Tesla and Elon, I kind of want to
So the Tesla story, I think, is amazing because basically the board has decided to give Elon Musk $30 billion in shares, 96 million shares, and they'll vest if he stays for 2 years. But the strike price is $23.34, right? And Tesla right now is trading at $309.44. So he's in the money big time, and all he has to do is stay at the company for 2 years.
Sweetheart deal?
I mean, to be fair,
is this from the independent board?
To be fair, he got an even bigger award previously, and that was struck down by a Delaware court, and that's why they moved their incorporation to Texas. But it just seems, as Bill Smead was just talking about with these massive payouts at Facebook, we've entered silly season in terms of remuneration. And although Tesla got to it before anybody else, it's another example.
Can I just ask you, though, is there really any fear that Elon Musk is going to leave Tesla? I mean, this is his baby.
Not that he'll leave Tesla, but that he starts this new political party, right? That he focuses too much of his time on the boring company, which doesn't really bore anything, and that he's got SpaceX that he's trying to deal with. XAI, maybe it's a good thing that he's bringing it closer into Tesla, but he's in the artificial intelligence race as well. So there's just, he's always had a lot of things pulling him in different directions, but they want to make sure Tesla still pulls him at least one direction.
He has to pay $2.24 billion in total to collect it.
Nice. I would pay that much to collect $30 billion
Here's
as
a couple
well.
billion and give me $30 billion
I'd
back.
need to borrow some. Another thing I want to mention.
I may exchange it with my husband like that. He gave, I don't know, I gave him like a 20 or 2 and he's like, or I gave him one. He's like, here, just take this 50. Like, because he needed smaller bills.
That's how
Do you ever do that with your like spouse?
I don't, it usually goes the other way for me, but you definitely won out. The other thing I wanted to talk about that I think is really interesting, it's kind of gone under the radar.
What?
Morgan Stanley has one of the greatest auto analysts out there, Adam Jonas, longtime Tesla bull, and I love to read his research whenever he comes on. I'm not whenever it comes out. I'm not blowing smoke because he doesn't ever come on. Like, I've been trying to book this guy for a decade. Are you talking
about the recent thing that he said, was it the last week about?
No, now he's going to transition away, Adam Jonas at Morgan Stanley, to a thematic role focused on embodied AI. So that's like humanoid robots. And this has been a big focus of Tesla as well. It's obviously they're not valued at $1 trillion because they're a car maker. So I think it's fascinating that someone as big a deal as Adam Jonas is now going to focus so much on humanoid robots. Maybe it's real.
That is actually a big deal.
Maybe we're going to all get a humanoid robot in the foreseeable future, and that's going to drive profits at this company.
Well, listen, if we consider, you know, you and I were just talking about the labor force numbers, and part of the reason unemployment rate stays low is because the labor pool is getting smaller. And so if we continue to not bring in new workers, we have an aging workforce. I also think about healthcare workers, right? The demographics, I could easily see that playing out.
Yeah, well,
right?
Guess what? One of my favorite doctors lately has been ChatGPT.
Oh.
I asked ChatGPT about a ton of stuff. I use ChatGPT to work on my car, work on my motorcycles, but the bot itself reminds me, hey, I don't really know that much about cars and motorcycles. I can help you here and there, but my strength is healthcare, because ChatGPT collects so much data around medical and healthcare. It's much better, it says, at giving me that kind of information.
I think there are some out there that say that that's where AI is going to be super, super helpful in terms of healthcare, because I think it's safe to say that it's difficult for healthcare professionals to keep up to date on it. Although
it's not a tumor.
We're getting a little email of like, what could go wrong if all you do is search on ChatGPT for all things when it comes to health.
I think it'll be interesting to watch the humanoid robot space, and it's not just silly season
Adam Jonas,
in terms of that.
Come on.
Come on the show.
When you're not going on tour, come on.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Food, taking you through to that closing bell with a global simulcast. It starts now. Carol Masser in the radio booth. Matt Miller in today for Tim Stenovic as we welcome our audiences across all of our platforms, television, radio, and our partnership with YouTube. A phenomenal day, Carol Masser, as we recoup some of the phenomenal losses from last Friday.
It's kind of amazing because Friday, I mean, it just felt like the headlines never stopped. We did see selling, and then, it never happened. We're seeing some buying into the close, and it is fairly broad-based buying today, Matt.
Yeah, I mean, we're up, 1.5%? We lost about 1.6% on Friday. So almost everything that we lost due to that horrible jobs report has been made back. Maybe the market is with Donald Trump and believes that that was just political.
You look at the 2-year yield and how it's little changed after at one point dropping as much as 29 basis points on Friday. There's a lot of things that could move that, though, in the coming days. You've got some massive auctions. You've got the 10-year and the 30-year debt being sold this week.
Yeah, and don't forget, I mean, at least in terms of equities here, we also have a pretty large slate of earnings once again. I know we got the big Mag 7s out of the way other than NVIDIA, but you're going to get a lot of names that are much more consumer-facing, the Airbnbs of the world, Ubers of the world. After the bell tonight, we get Palantir, so a read on AI. So a lot that could also shape the direction of this market.
And let's not forget that we still could get news on the trade front and the tariff front, certainly from the White House. So still lots to come this week.
Absolutely. On a day where a lot of us woke up and we're kind of wondering whether Friday's sell-off would carry over into today, we got a big response by the dippers, saying, Anytime we've seen these drops in the past, we've seen those people come in pretty quickly here to buy that dip, and they did it in a big way, a way that pushed the Dow Jones Industrial Average up by almost 600 points, or about 1.4% on the day. The S&P 500 pushed up by more than 90 points, or 1.5% on the day. The NASDAQ Composite pushed up 400 points, or 1.9% on the day. And the Russell 2000, that's your outperformer, 46 points higher than where it was on Friday, closing out up 2.1%.
All right, guys, as we said, pretty much broad-based buying in today's session. Scarlett, we've got 430 names gaining ground on this Monday, 71 to the downside, 2 unchanged.
Yeah, pretty lopsided there, and that's what you'll see in the IMAP as well. There is one sector that did finish in the red, and that is energy, down about 0.4% as
that's it, folks. Market close here at new high day.
Certainly Brent did, at least. In terms of the gainers, communication services and tech each gaining more than 2%. Utilities also finishing